I gave crypto one last shot. Doing everything that's the opposite of sexy and exciting. I made a lot of money. I used to be friends with Andrew. Interesting guy. So is his brother, love his brother, and they love cars. We went to Jebel Jais, the tallest mountain in the UAE. That was fun. If you see a lot of Andrew in your algorithm, you're only seeing good things. I remember sitting right there and he was talking about, I understand in this game, you've got 3 strikes or whatever. Cancel, prison, kill. I was sat like where your couch is behind you, like that far away.
Hey Sammy.
How's it going, mate?
Pretty good, pretty good. How's your day?
Yeah, not too bad, man. Not too bad. Been to the gym, come back.
Whereabouts are you based, Sammy?
Right now, I am, I don't know, like 100 miles out of LA in a random forest.
That's so cool. Is it like one of those lodges, those forest lodges?
Yeah, a little bit. Yeah, like a cabin made out of wood, and yeah, just kind of living in the snow right now, to be honest, just in the mountains.
Snowboarder or skier?
Neither. I'm just here because I like the scenery, I guess.
How often do you sort of like go out and get away from the city and reset? Is it like a reset type of trip right now for you?
I used to travel a lot, and I stopped traveling because I needed to focus more. So I did the longest stretch in one place for a long time in Dubai at the end of last year, kind of from October to February, for 4 months. 4 months is a very long time for me to not take a flight, and it felt weird. And then when I left, I just kind of felt like, middle of Feb, I was like, all right, I just need to be on the move for a little bit. But after a little bit of travel, I'm in California, and I'm just kind of it's not like a reset thing necessarily. I don't necessarily feel like I ever need to reset from anything. It's more so just I could be working in the Burj Khalifa, or I could be working in a snowy paradise setting in California. So I'm just choosing a different, keeping it fresh. That's what this is for me.
Given, like your lifestyle is, working online, working from your laptop, is it worth like getting leases or buying apartments, or do you just Airbnb short-term leases everywhere?
I mean, it's nice to have a base. It's nice to have a base in a tax-free country, and so on, So there are those elements to consider. But I think that, if you're young, if you want to kind of see the world, if you want to, look, I mean, most of us were just kind of working online, right? It doesn't really matter. Time zones don't really even matter for when we work for a lot of people like that are online. That is, obviously, if you've got a normal job, then okay, these things matter a lot, but if you can, then why not? If you're lucky enough to be born with the right passport as well, like why not? You're kind of just wasting it if you, that's the way I see it. So yeah, lots of Airbnbs, hotels, whatever is suitable, I like to be in places where I, don't have interruptions to my work. I want a good gym. I don't want to struggle to find good food. It means, unfortunately, that a lot of the times I've got to be in a city, and at that in a decent part of a city, because if I'm in a not so upscale part of a city, the options will be fried chicken as opposed to grilled chicken salad, right? So these things kind of matter, and it gets expensive if you want to do it to a standard where your life does not have an interruption. But it's cool and it's worth it.
What's your thoughts between sort of that laptop lifestyle, digital nomad, traveling around, working off your laptop versus like having a home base, having an office, standing table, dual screen, camera, mic, and having like a setup?
Yeah, well, that's interesting you said that, because I've got exactly what you just said back home in Dubai. And it is just everything I could ever want, plus, you know, a lot more, which is amazing. But ultimately, the work happens up here, right? Like, you don't need 6 trading monitors and, a crazy setup. You kind of just need an iPhone, right? Like, a lot of people these days are getting out hustled by like a 16-year-old Indian kid that's working out of like a Samsung Galaxy A20. Like I barely even know what model of phone that is, but I know there's a kid out there that's making like $10,000 a month just off that. So you don't need that stuff. It's nice to have, if you're working a lot, if you're being very productive and so on. Of course, these things are useful. But bottom line, if I'm gonna lose 10% of my productivity to enjoy life 50% more because I'm in a different place, you know what I mean? Like, that's kind of how I'm weighing this up.
Got it. Just for a bit of context, Sammy, for me and the audience, tell us like a brief rundown of your story. You're super young, you're like 21 years old. I know you're in the crypto space. Please sort of give us a brief introduction and I'll start diving deep into the little things you share.
Yeah, man. I was never a normal kid. Always hated school. That was a big part of it. You'll find out why in a second. And I was a YouTuber since I was 8 years old. Just kind of, I don't know, just always doing things differently. Always, internet money, whatever. Age 13, I've been a YouTuber for 5 years at this stage. I end up starting my own company where I manage other YouTubers in exchange for a percent of their revenue that they generate from ads. And my part of the deal is I've got to help them grow. I've got to help them just give them what they need as YouTubers, just facilitate them being YouTubers, bring them sponsorships and so on. That was my first business. 15, 16 started to change a little bit. That industry actually got shut down by YouTube, the one I was working in. It was called Sub Networks. And then I got a little job managing a YouTube channel, lasted a few months, but paid very, very well. Then I got into crypto when I was 15. And Bitcoin was at $2,000, something like that, for the first time. This is early 2017. I got in because a friend of mine made money on Bitcoin, and I was like, well, if he can do it, I can do it. I had always been interested in Bitcoin. I just never understood it. And back then, the resources for understanding how to get into crypto, and more importantly, in my case, how to buy crypto, how to store it, and so on, were very limited. There were limited resources. There were limited fiat on-ramps, we call them. So from fiat into Bitcoin is called an on-ramp. There were limited on-ramps. I was under 18, so there were a limited number of restrictions. It was very, very hard. Which kind of sucks because I wanted to get into Bitcoin since I was like, I don't know, maybe 12, 13. Everyone heard of Bitcoin the first time. Like, if you were like a tech guy and young, you definitely heard of Bitcoin back in like 2012, 2013, maybe just a little bit, like one word. And I wanted to get in, pretty quickly, but I just couldn't, But then when this guy did, I just kind of figured, let me just ask him how he did it. And that was the best mistake of my life. And I ended up getting into crypto then, age 15. I was a horrible, horrible trader, lost all my money multiple times. I had to keep putting money back in. Fortunately, I had money from my existing business and that job I told you about a few minutes ago. And 2017, managed to rack up a high of $80,000 from 300 basically. And the reason I did so well there was I actually partnered up with somebody else who at the time was selling information on crypto, basically. And I was like, hey, you're good at this stuff. I'm good at, marketing. Here is my background. Let's just do a 50-50 thing. And I have no idea why I asked him. The guy actually wanted me to be a customer. Funny, this is how it happened with the first business too. Somebody approached me so that I'm basically his client. I'm managed by him as a YouTuber. And I was like, hey, why don't let's work together, and then let's work together turn into me running my own company. And in this case, with this crypto thing, it was the same thing. He's like, that buy my thing. And I was like, no, let's partner up, which is important because it was just kind of a shot in the dark. A lot of my life has been just shots in the dark. Even now, it's still, I just kind of, I remember this brilliant analogy of, as a YouTuber, to find out what works, as an influencer. Back then, we didn't have that phrase. You got to pick up a pile of shit and just throw it at a wall and see if it sticks. And if it sticks, do it again and again. If it doesn't stick, pick up a different pile of shit and throw it at the wall. And that's what I was doing my whole life. I was literally just looking to try out a bunch of different things, see what might work, what might not. And this was one of those random shots. Getting that job I told you about, which paid me, a good amount of money at that age 15. That was also just a shot in the dark. I just kind of like, there was something there. I was like, okay, let me go in that direction and explore this opportunity. And so because the marketing was going very well, and that guy was actually a very good trader, I started to make a good amount of money in 2017. Lost pretty much all of it by early 2018. I also then quit trading and quit everything and went back to school because I had like $20,000 down from 80. So what the fuck am I going to do with 20K? 80K is nice, but 20K is, I was born and raised in the UK, right? Like 20K is a lot of money, don't get me wrong, but I'm looking for financial freedoms and, fucking Ferraris and mansions and stuff. Like 20K is nothing. So I kind of looked at going back to school. At this point, I really wanted to drop out. I hated school. I was getting bullied, very fat kid, no friends. Everyone was mean to me. It wasn't nice. Even my closest friends were not nice. at times, and then it kind of just felt like crunch time. I was like, I can't fucking do this. I can't stay in the system. I can't go to university as I planned. Bless my mom, Pakistani mom. She wanted me to go to university because I looked like I was the smartest kid in the family. You know, just kind of naturally, you know, doing well in school. I was that kind of kid. You know, she thought I'd be a doctor or like at least get a degree. But you know, as time went on and I was making money in crypto, even though I lost a bunch, I knew that I could then do it. And I was like, yeah, I don't want to be in school anymore. So I gave crypto one last shot. This is actually like the big thing that changed for me. It's a story which like feels weird to tell because I know for sure if I read this in a book I wouldn't believe it. But it literally came to a point where I was so fucking desperate, mate. I remember I read Think and Grow Rich, and you know, it was like there can be no plan B. You have to have this fire under you. Best book ever, Napoleon Hill. And you know, you got to have this fire under you and just fucking run for your goal and stuff like that. And I was like, you know what, let me just take a leap of faith on this. And I tried trading one last time. Up to this point, I had quit so many times, even in 2017, because I was a bad trader. I had quit so many times and then come back to the space over and over. This time I was like, one last time. And this time I'm going to do it right. Up to this point, I had read many books on trading. I had read many books on the psychology of trading, on principles, on analysis, and so on. And I was like, I am going to literally trade right now as though behind my shoulder is a trading mentor that I read from in one of these books. And I don't want to disappoint this, you know, 65-year-old, extremely wealthy American man that's teaching me how to trade. I want to behave properly as though he has coached me so that I don't disappoint him. And that meant completely removing emotions, exercising risk management, not putting too much money into trades, being careful, trading less, doing everything that's the opposite of sexy and exciting. And I made a lot of money. And for the first time consistently, I was making a lot of money. I was, you know, triple digit gains, you know, meaning more than double of what I put in week or multiple times a week consistently for like 2 months. We're up to like June, July of 2018 now. And I was also making YouTube videos at this time. So I started to get really well known because my analysis was just on point. Everything was amazing. Every call I made, it felt like anything I touched turned into gold. This turns into a problem in a few minutes. And so between, you know, where I was down to 20K and at this point I must have come up to over 100K. Yeah, it was over 100K at this point by June. Big. I mean, you know, within like 3-4 months, quadrupling my net worth. I decided to reopen that group. But by this point, the guy that was running it with me just kind of dropped off. You know, the bear market was very rough and a lot of people can't survive it. He had a somewhat more complicated situation, which was unrelated to crypto, and I'm not going to go into it, but he kind of had to drop off for other reasons too. But, you know, most people just kind of get wiped out. So it was just me running the group. Fortunately, up to that point, yes, I had the marketing knowledge down, but I had been working with this guy for maybe like 6 months. So I also knew a lot about the trading stuff that he was doing. I used that time to learn. So I was able to run it on my own, blew that up. And, you know, people wanted to pay and join, and that did very well. And I was just kind of compounding like that until I turned 17. And when I turned 17, I got my the ability to drive in the UK, which, you know, it was a big deal for me. I wanted my freedom. I wanted to leave school for the same reason. I wanted to be able to go anywhere, you know, not have to take the fucking bus, not have to take the train. I hated that stuff. I hated public transport, still do. That has not changed. And at the same time, everybody was giving me the social validation that I wanted. You know, like I said, no friends back in school, but now I'm the prodigy kid where, as I said, everything I touch turns into gold. If I say I'm going to buy a coin, best believe it's going up 30% in a few days kind of thing. And I got that reputation. So everybody was giving me all of that validation. And that turned into a really big problem. That got to my head. Many people asked me to manage their money up to this point. I always said no. A family friend asked me at this point, and he was also helping me with my taxes. And I was like, and you know, and I was new to that world. I don't know anything about taxation. I didn't know like what a business was. I was like just 16 turning 17. No one teaches you this stuff in school. So I was really dependent on this guy. And I thought, you know, he's a family friend. He's helping me out. Let me take his money. This all happens like right after I turned 17.
What year was this?
This is 2018. We're in August 2018 now. I take his money. Everyone loves me. I'm making a lot of money. And then bam, loss, and actually liquidation, meaning I lose 100% of what I put into the trade. And obviously because I'm fucking, Mr. Loyal, that's like the prodigy kid that's going to become like richer than Warren Buffett in 20 years. I didn't exercise good risk management, and I just kept losing all my money. So this guy, he gave me $10,000 to manage. I was like, okay, I'll do it for you as a friend. I didn't want anything back anyway. I lost $9,000. I lost all of his money within 10 days. It was a bad period. My trading decisions were going wrong. People were upset at me because they thought I was an amazing trader, and then I turned into a bad trader within the space of 10 days. And then I got hacked. And I lost $250,000 just after turning 17. And that was a lot of nice stuff that happened, kind of from like, I really started to tighten up April, May, up until the end of July. And then July, August comes around, and then bam, bam, bam.
So you turned 20 grand into 80 grand into 250 grand.
Into much more than 250. I kind of skipped that part. So from like June, July, it wasn't like 100K anymore. It was significantly more, and I can't remember the number. It could have, I don't know. It could have been like 300 or 700, like something way bigger. But I remember specifically that I lost 250, and that it was less than half of everything I had at that time. And that I kind of just dusted myself off, pretended that nothing happened. I don't know where the fuck I got all that strength from, because that's a lot of money to lose at 17, even if I had made like over a quarter of a mil at that point. I kind of just dusted myself off and acted like it didn't happen, to the point where people thought I lied about it. When I told my private group, I'm like, guys, I'm a little bit fucked up mentally right now. I lost $250,000. Bear with me, I'll be back. But then the very next day, I just kind of and they thought I was lying about it, trying to grab attention. Not all of them, but the ones that were very unhappy with me did think that. And then kind of by September, October, just learned my lessons. Security is very tight now, and had made the money back. And so it just turned into like a very big. I can talk about it with this much detachment now because this year marks the 5th year after it happened. So I have a good amount of emotional distance from this tragedy that I experienced. But at the time, it was absolutely horrific.
During that 2018 bear market, how were you making money? Like, how did you make back that 250K? And also, how did you get hacked?
So, bear markets are where really good traders are made. The thing about bear markets is, see, when you're in a bull market and you're actively setting all-time highs, that's the easiest market to trade for sure, right? And that's simply because everybody has fresh blood. Everybody's stupid. Everybody is just ruled by emotion. That last point sticks in bear markets, which is useful because anytime where like emotions are going crazy, you can make a lot of money. Psychology is fairly predictable. People always ask me, like, is trading do you need to have good math skills for trading, stuff like that? No. The primary thing I studied as a teenager was psychology. I dropped out of school. I was bad at math. As soon as algebra came into the mix, I was horrible. I thought I was good at math until that. And, so math accounts for nothing. It's all psychology. And when you're in a bear market, you already have every level defined. Right? Like at the time that we're talking right now, Bitcoin's sitting at $29,000. I know that Bitcoin has support at 25, that Bitcoin has support at 21.5, at 20, at 17. I know these, like, Bitcoin has support. I know where it can fall down to. When you're in price discovery mode, when the price is actively setting new all-time highs, you've never seen, you don't know how Bitcoin is going to interact with $73,000 because we've never been there. We might blast straight through it, or we might find resistance at 73 because people are front running 75. Everyone's expecting a sell-off at 75. So the smart guys sell at 74 and the very smart guys sell at 73. And then we top out at 73, right? We don't know how, but I know that if we fall down to 25, we're probably going to find support. So bear markets are significantly easier to trade in that sense. And 2018 just happened to be an easy bear market. Like the bear market we're in right now with Bitcoin is incredibly difficult to trade. 2018 was way easier. So in that sense, I got lucky. We had the levels predefined. I was going short. Consider this, from $7,000 down to $6,300 is basically a 10% drop. If I trade that move on 10 times leverage, I'm now making a 100% profit, So if I put in $10,000 into that trade, I took 20K out. So it's pretty easy to make fast money with, 7K to 6.3 for Bitcoin at that time was not a big deal. Like, that's not a big price move. So yeah, it was a good market. I had very good mentors and I was really plugged into the game. My whole life was trading. As for how specifically I got way higher than 250K, it has always been at that point a mix of making money from that information educational service that I was running and compounding that. So, let's say I made like $20,000 in revenue, I would then throw that into the market and the market turns that into more money for me. So it was always like, taking money from here, moving it here, blowing it up. And that's how it was for some time until I had, enough money that, I could kind of trade with and be comfortable to kind of risk in the market. And then it massively shifted to the other side where now I still run the same thing, but it accounts for maybe less than 10% of what I make.
The trading?
Yeah, no, the business stuff, the trading accounts for like 90%.
Wow.
Yeah, whereas before it was massively skewed. Before it might have been like 100% coming from the business, but then I move it into trading, and the trading just turns it into crazy money to where this didn't look like anything, And then as time went on, that kind of evened out, and now it's, I just can't make that much money from selling a business at the moment compared to what I can. It's just a lot easier to make money as a trader if you're putting in, a good amount of money.
Got it. In 2018, did you start a YouTube channel from scratch? How many subscribers did you have back then where you're sort of creating content and sort of helping people with education?
So I started my first channel when I was like 8 years old. So it would have been like 2009, around there, maybe a little bit younger. My current channel I started in 2011. So yeah, I've been running it for 12 years. And it's been everything, it started off as like entertainment videos, gaming videos, news videos, almost political videos, strangely. And, I tried to do like a Philip DeFranco or like almost like a bit of Joe Rogan, but 5-10 minutes long instead of, multiple hours. But yeah, it turned into crypto when I got into crypto. The channel just always followed my natural passions, I guess, or interests, I would say. It used to be gaming, then it was smartphone reviews, laptop reviews, and then it was crypto. So I don't know, man. It felt natural. I had always been a YouTuber. I've been a YouTuber now for more than half of my life, right? Like from 8 years old to 21. I know being a YouTuber more than I know anything else in my life. I just kind of did it, and I had always made tutorials, so I made tutorials and stuff like that. I like presenting my analysis. I think I'm a good analyst. I think I know what I'm doing, and I like getting behind the microphone and talking shit for 20-30 minutes every day.
Love it. With your first crypto community and sort of community that you built, was it piggybacking off the previous YouTuber that you worked with, or was it all the audience you built? You started created crypto content and just people started joining your community?
So I had like 10,000 subscribers, maybe 15,000 subscribers from tech when I got into crypto. So crypto didn't, and now I'm at like 130,000, for comparison. Yes, some of my tech viewers were also just naturally interested in crypto. Some of them were already interested. Some of them became interested because I was talking about it. Because I had a transition, right? There was a time where, for a few months, it was like a little bit of crypto, a little bit of tech. So I kind of, eased into it. Those who were interested, stuck around, and those who didn't are, just forever subscribed, but not, they're just not getting my content recommended to them anymore because they want to watch Marquez, MKBHD instead of me. So, that happened. But yeah, most of the growth came from crypto.
Got it. And then, Sami, are you sort of trading? Are you doing options? Are you doing leverage? Like, what are the differences between all these for people like me who might not know?
I don't know, man. I know how it works in crypto. I don't know how it works in traditional finance. I've never understood it. I tried, but I trade on leverage. I trade Bitcoin derivatives. There are multiple Bitcoin derivatives. The issue with Bitcoin derivatives is there's no legit one. Like with gold, if you want to trade gold with your broker, you're going to be trading a derivative of gold because you're not buying like actual physical gold. So it's always a derivative, but it's always regulated, right? Everyone in the world knows gold, but there's no like, a government can't. Actually, a government could probably. I don't know. I don't think a government can like just come up and make a Bitcoin derivative. So you're always trading like. It's always like a gray area, but yeah, crypto derivatives are what I trade, and that's just standard leverage. Isolated leverage instead of cross, which may or may not mean anything to you, but it's just a simple way of trading. And yeah, I just kind of look at buying and selling when I see easy opportunities to make money. That's all. It's not that complicated.
Got it. So I sort of understand the model of you buy one Bitcoin for $20,000. You own that one Bitcoin. Bitcoin goes up to 30,000. You sell that one Bitcoin for 30,000, and you've made $10,000 profit. So I understand that simple trading. What is leverage trading? How does that work?
So where it would be different is, okay, let me make this even simpler. We all know what a mortgage is. If we don't know what a mortgage is, then probably search that up before coming back to this podcast. But basically you're going to be putting, let's say you got $100,000 house, and you've got a 10K deposit. Let's say, and whatever, interest rates aren't crazy. This is going back like 2 years ago. You've got, like, everything's normal. It's just like a normal, you're doing the American dream. You're doing the Western dream. Your 100K house after a year, it turns into a 110K house. You can sell that 110K house and you've only put down 10K plus your monthly payments across that year. So let's forget about the monthly payments because that complicates it. When you sell the house, you give back 100K to the bank because that's what they lent you. You give back 90K to the bank because that's what they lent you. You take the asset appreciation, which is 10K, and of course your own money out as well, because you put the deposit down. So you're walking, you put 10K in, but you're walking out with 10K. So you've doubled your money and you've effectively used 10 times leverage, because your 10K deposit turns into a 100K house. So what we're doing with Bitcoin is Bitcoin's at 20K. If I've got $20,000, amazing, I can buy one Bitcoin. But if I've got $20,000 and I'm feeling a little bit spicy, I can be like, all right, give me 50K. Let me trade with 3x leverage, 20 times 3. So I put $60,000 into the market. I don't know why I chose a hard number. Let me say 5x, right? I put 100K in. Now I'm trading with 5 Bitcoins. So my reward is multiplied by 5, but so is my risk, which means I have a liquidation level. And I'll get to the liquidation in a second. The fun part is that if Bitcoin goes from 20 to 30, I'm making that $10,000 profit 5 times. So think of a house mortgage on steroids and speed, because it's going to happen. You're going to make way more money and you're going to make money faster. Our goal as traders, my goal as a trader when I was younger and I didn't have money, was to put myself in a position where I can turn a small amount of money into a large amount of money. The reason property and real estate is a horrible idea for a young broke person to get into is because that game is made for rich people, right? Like, your best case scenario, on average, you're making 8% a year, right? And like, that's without recessions, or maybe with recessions factored in. 8% a year on, a broke university student savings account of $400 isn't shit. Like, there's no way you're going to make that a nice, like, unless you're just happy to make $5,000 for the rest of your life, which, fair enough. Good for you. I wish I could be that simple. Trust me, my life would be a lot simpler and maybe even happier if that was the case, right? I applaud those people. But if you're interested in bigger money, that's a horrible, like, 8% a year is fun when you're working with $100 million. Now you're making $8 million a year, right? That's good money. That's private jet money. That's, partying in Monaco during F1. That's a good life, but 8% a year on even $100,000 is 8K. What are you going to do with 8K after 1 year? You're not even making minimum wage. Like, a lot of young people that get into real estate live way worse living conditions than a minimum wage person would, because they've got to be so fucking tight and stingy with their money because you're just not making much. So our goal as traders is, where that 8% profit might take 1 year, I want to make that 8% profit in 3 hours, and then I want to do it again and again and again, because the second part that's important about this goal is, 8% in and of itself is not impressive, but 8% compounded for 25 years in a row, that's good money. So not only do I want to get that 8% in, as opposed to 1 year in 3 hours, I want to keep getting it so that I can get that 25-year gain within 3 months. The ugly part of the way I trade is, if I'm taking 5x leverage, my risk is multiplied by 5x. So where, if I just do a normal spot purchase, what you described as a spot purchase, if I do a spot purchase of Bitcoin at 20K, I've got one Bitcoin, and to have a maximum 100% loss, Bitcoin would have to be worth $0. But to have a maximum 100% loss with 5x leverage, Bitcoin only has to drop down by 20%. Because as soon as we've fallen down by 20%, that risk is multiplied by 5. I've lost 100% of my money. So 20% off of $20,000 is 16K, which means that if Bitcoin is at 20K when I open, but then Bitcoin falls down to 19, I haven't lost $1,000. I've lost $1,000 times 5, so I've already lost a quarter of all my money from, a negligible price drop, a 5% price drop. So leverage is incredibly risky. You have to really know what you're doing. And most of the time, 99% plus, you're going to lose all your money, or most, when you start leverage trading. It's just part of the I don't know anyone that didn't lose all their money when they started to trade. It just doesn't happen.
The example you made for the mortgage was like, it made it clear for me. Like, I've never heard someone explain it that way. So thank you, Sami. Like, it just instantly was like, okay, I get it. In the real estate space, when that 100K house goes up to 110K, you sell it, you make 10K, you get back the 10K you also deposited. So now you doubled your money. The person who bought it sort of bought it at a 10K increase. So you sort of won, and the person who bought it sort of holds the bag. And then if the house goes down to 90K, you sell at 90K, now you lost all your money, and you sort of holding the bag, and the person who bought it, they won the deal by getting the house at a cheaper price. In the leverage scenario, who's losing and who's winning? Like, if you're winning, who's losing out? Is it the exchange? Are there people leverage trading against you? How does it work?
Yeah, so with a house, it's generally quite straightforward, right? Like, I'm selling a house to you, I'm the seller, you're the buyer. I know, like what's going on. But with trading, you're trading on an exchange or with a broker. You don't know who's on the other side of that trade. So I don't know. Like, if I'm making money, I don't know who's losing. Someone's losing money. It's a zero-sum game, right? Like, for someone to win, someone else has to lose. Which is different to, like business, which is almost always a positive sum game. Like a bakery. I'm talking normal businesses, not banks. But like normal businesses, it's a positive sum game. You're actively contributing. There's a high probability that what you are putting into the economy is helping everybody. With trading, no, you're taking money from someone. And I don't know, it's not the exchange. The exchange is probably taking money from you, although I can't talk about that very much. I mean, put it this way. If you're making money as a trader, you're most likely taking money from somebody who's impatient. That's the best way to put it.
Makes sense, because I recently finally understood options trading and foreign exchange, where I heard that's literally gambling. Like, in foreign exchange, you set your thing like, okay, $1.32 for $1 USD, and for every single point it goes up, you earn $50. Every single point it goes down, you lose $50, and it's literally gambling.
It's gambling if you don't use the tools properly. Okay, here's the thing, right? Let me demystify trading versus gambling inside of 2 minutes. Every time you take a trade, you're rolling a dice, and that dice must be weighted in your favor. If it's not weighted in your favor, you're gambling. If that dice is weighted in your favor, where 60% of the time, 70% of the time, 51% of the time, you're going to make money. This is a very simple analogy, because it gets a little bit more complicated, and I'll talk about that in a second, because this is where it gets more fun as a trader. But as long as your dice is weighted, you're going to keep rolling it. So each individual trade is 100% based off luck. If you want to use the word gamble, go ahead. It's not a gamble. It's based off luck. You're rolling the dice. The reason it's not a gamble is because it's weighted, which means that statistically, across a long enough period of time, it's impossible to lose money. It's only possible to make money because that dice is weighted. So while an individual trade is a risk, 100 trades should have very little risk, simply because I'm rolling that weighted dice. So that's the difference between trading and gambling. With gambling, you don't care about the dice. You're not thinking about it because, I don't know, you're just being stupid or irresponsible. But with trading, you have to be careful. With Forex, like you said, you're basically applying leverage. If you're making $50 every time it moves up by X, it's because you're applying leverage.
Got it. Could you create a weighted dice with just one simple rule? Can it be as simple as buy every single time you hit a micro support band, sell when you hit the upper support band, and you just do that all the time, and that's 1% edge, and if you just keep doing that over a long period, you'll make a lot of money.
Simple is always best, man. An approach like that will make way more money than the guy that's got his MacBook and iPad side by side with 2 different charts, and throwing on 3 different indicators and drawing on it, and looking at 5 different Telegram channels and speaking to his friend about it, and whatever. Like, yeah, you're gonna make more money than that guy for sure, because you're doing something simple. So yeah, my favorite, most simple form of having a weighted dice is in an asset that you believe will continue rising. For me, that would be Bitcoin. Dollar cost average, which simply means buy a little bit every day, every week, every month with a set dollar amount. Like every month, I'm going to take $400 out of my paycheck, $100 a week, and I'm going to buy Bitcoin regardless of the price on Sunday night. And where you can make this a little bit more fun is, okay, I've gone from weekly purchases of $100 worth of Bitcoin, regardless of the price. Now, every time Bitcoin trades down by more than 5% in that week, I'm going to buy $150. And every time Bitcoin trades up by more than X% in a week, I'm going to buy $50. So you can start weighting it. Now you can start adding a layer of complexity where On down weeks, you're buying more, and on up weeks, you're buying less, which, as you'll hopefully notice, the opposite of most traders, because most traders only want to buy when the price is going up, and they only want to sell when the price is going down. But obviously, if you like making money, you're not going to do that.
Will it get harder and harder to create a weighted dice over time? Because isn't the weighted dice weighted against the education level of the market? So if everyone's doing the same thing, all of a sudden that dice is no longer weighted.
That's I find this discussion interesting because it's been going around for decades. And literally another way of asking this is it's similar to the discussion of self-fulfilling prophecies in trading, right? If everybody's a technical analyst, then TA doesn't work. And to that I would say, but there are analysts that consistently make money over years. Are they just lucky? And if you want to conclude that they're lucky, then okay, whatever. But if you want to look into it a little bit more, you'll see that they're adapting. When the market has a lot of fresh blood, when it's a bull market, when Bitcoin's breaking 20K for the first time, hitting 40K, hitting 60K, there's a lot of fresh blood. It's a very easy market, as I was saying towards the beginning. But when people start leaving, when the market starts looking less attractive, when you're making less money, you're losing money, there's bearish headlines, US is trying to ban crypto, China banned crypto again for the 14th time, India's trying to ban crypto as well. And at the same time, Michael Saylor says, I'm losing confidence in Bitcoin, whatever, then yeah, fresh blood is going to leave and you're going to be left with the sharks. And it will be harder to trade. So it's not that everyone's educating themselves necessarily, it's just that the bad traders are leaving. So you're kind of left with the good ones. But the market changes. And that's one of the things that keeps trading fresh. That's why trading bots, for example, don't work nearly as well as people think they do, because trading bots are just designed to do one thing. But as soon as that thing has happened too many times, it's going to stop working. Exactly like you said. That's where the human comes in and says, all right, what are the characteristics that are changing? Where previously Bitcoin loved to form a certain pattern that looked like a right angle descending triangle, now Bitcoin loves to deviate, which means it will break a key level. It will look like it's about to start flying and it will fake out and come back down. That's called a deviation. So that deviation characteristic didn't really exist for Bitcoin in the way it does now years ago, but it exists now. And if you had been smart enough to spot that 12 months ago, you would have made a lot of money. So the dynamics change, what works changes, and that's a big part of the job. It's probably the hardest part of the job, because while all of this is changing, your emotions are also going to play a factor. So where I might have made money following a certain strategy from June to August of last year, by September, I really need to change that strategy. But if I've made a lot of money between June to August, I'm going to have some level of emotional attachment to that strategy. And it's going to be hard to admit that it's time to change things. In fact, 3 months is a long time to be making money. It's going to get to my head a little bit. I'm going to have to battle my ego a little bit too. I'm a good trader. Should I really be changing my strategy? Shouldn't I be following the advice of everyone that says just kind of stick with it until it works? There are rough patches where everything that I'm doing should work but doesn't, but it doesn't mean I should stop, because after 5 months it might start working again, and I would have lost more money if I'm rapidly changing from strategy to strategy. So these are the debates that you have to have as a trader. A lot of traders that have been in the game for a while will tell you that it feels like psychological warfare 24/7, and that is a very accurate analogy in my mind. Trading is, everyone that sees the trading lifestyle on Instagram and whatever, with like a private jet and nice tailored suits and a Rolls Royce taking you up to it, and your beautiful like plastic surgery girlfriend next to you as well. Like that is completely the opposite of real trading. Like the best traders I know are guys with very high levels of autism that you can't really even socialize with, who just kind of live at home all day and they eat, sleep, breathe shit, markets and financial news and stuff like that, and the second best traders that I know after them are your family guys that have a nice normal life. They wake up at 7 a.m, they have breakfast, hit the gym, they look at the market, like just nice, respectable, structured lives. It's only those two tiers of people that I've seen that kind of, do well as traders.
So when you're sort of going through that mindset of like, hey, today I didn't do as well, I'm using the same strategy. Could it be just like an off day? Could it be some news that affected things and it's not technical analysis? Should I actually change? Should I stick to one thing? Like there's so many reasons why it's not working today. How do you know which path to pick?
That's the hardest thing, man. And I struggled with it for a really long time. It's a constant struggle. It's one of those things where I'd almost say, I don't know if it gets easier or if you just get better at dealing with it. But usually the way this goes is like challenges like this. This is where trading is hard. This is where it's really, really hard. A lot of people will either toughen up, learn, fix themselves, and continue, or they'll just quit and take their L and go home and work their job again. You know, the way you handle this is trading journaling helps because, you know, we all analyze the markets. We want to look at the charts. We want to look at, you know, the Fed interest rates or whatever. We want to look at all of this data, but we fail to analyze ourselves. And analyzing ourselves, our psychology, what happened on a given day, I will write, you know, what color t-shirt I wore on the day that I decided to make a profit. To make a trade. You know, and if it turns out that wearing red t-shirts tend to, you know, result in a bad, you know what I mean? Like, I'll stop wearing, you know, the point I'm making there is I want to track all the little details. Did I have this one particular feeling that like, maybe I should just wait another 4 hours before, you know, one more confirmation, but I ignored it. And did ignoring it result in more losses on average than gains? If it did result in more losses on average, when I made the gain, did the gain turn out to be astronomical to the point where it doesn't matter? Because you know what I said earlier is you only need a 51% success rate. That's not true. A lot of traders can get by with a 30% success rate where every trade they're losing money, they only lose $10. But every trade they make money, that 30%, they're making $50, $100. Now, all of a sudden, all those losses that you made previously don't matter. More specifically to your question, though, trading journaling helps a lot. I think, you know, following other analysts and traders that are good, that have proven themselves over the years can be helpful. Now, the problem here is everyone talks shit. So it's kind of hard to know who's good and who's not. You'd have to do the work in terms of looking at their previous posts. And, you know, maybe with Twitter, you see if they've been deleting tweets and stuff like that. And then you kind of see like, you know, okay, this person for the last 6 months has been pretty sweet. It's a lot of work. I didn't say this would be easy. It's going to take time. But, you know, you kind of look at other people and you start seeing like, okay, this guy, you know, tends to focus on deviations a lot more and he's making money compared to this guy who is more interested in just normal chart patterns. He's not making as much money anymore. I'm not saying that we follow this guy, but let me pay a little bit more attention to deviations. Let me see what he's saying. You know, and then you kind of find, so you just kind of like look at different people with different styles of analysis and you can kind of start to, you know, judge what should influence your analysis more in terms of like, okay, now I'm going to pay more attention to deviations. Now I'm going to pay less attention to, you know, a chart pattern, for example. So that's another thing. Trading journaling, looking at others. Let me think of something else because I want to give 3 right here. Probably the third one I'd say is stop trading. You know, a lot of the time just pressing the brakes helps. You know, if that means taking a week off, 2 weeks off, if it means just stop basically. Trading should never, you know, be your whole life in my opinion. You know, like I said, the people that make the most money, it is their whole life, but you don't want to be like that. You don't want that kind of money. You know, most people, they want money and a good life, you know? So I'd say focus on something else in life and come back when a good opportunity presents itself. It's not like you're going to get dumber if you wait 2 weeks, you know, the market's always going to be there. That's my take on that.
One thing that I think you're right is probably the most difficult, like, let's say if a dice is weighted 50%, that allows you to break even. If it's weighted at 51%, you're sticking to this one strategy. It gives you that 1% edge. So you're sort of making money. How do you even know when that 51% weighted dice now becomes 49% and it sort of got less weighted and you can't even know that shift? But I guess journaling might help, but like it's hard to tell if your strategy is no longer weighted in your favor.
You know, in an ideal world, you would come up with a strategy, replay the chart. There's a button on tradingview.com, which is like the main charting software that I use and everyone else I know. And there's a button called replay. It's a paid feature, I think, unfortunately, but it's not expensive. You can replay the chart back to, you know, right now we're in, you know, March, April 2023. We can replay this chart back to 2017, February. And I can just apply my strategy with a pen and paper next to me, you know, and just be like, all right, February 17, 2017, I would consider taking this trade, but I'm going to wait a few more days for confirmation. Okay, February 19 comes along, I'm ready to enter. I enter the trade, and then I look at what happens up until February 24, and then that's when I would have closed. And you apply that strategy with a pen and paper. If you have a more advanced strategy, you can automate that. You know, it's not difficult to code a bot that kind of like paper trades historic, you know, information. So you're going to get your win rate from that. That's what you would do in an ideal world. If you're a more normal trader, almost a little bit like me in this sense, it's a more abstract, you know, I don't really ever look at what my success, it doesn't matter to me what my success rate is as long as I'm just making more money. Like I don't care if it's 51% or 1%, as long as I'm making more money. But these are your more structured, like what you would learn if you go to like a trading school how to do it safely and so on. And that's important ground level knowledge. You must have it. That's how you would back test. So, like, okay, for 6 years, I'm averaging a 53% success rate. Is it going to be 53% in the next 6 years? Maybe not, but that's good enough, for a lot of people to be like, all right, let me put, $100 behind that.
What's your thoughts on picking a simple strategy that has been back tested for the last 2 cycles or maybe in 3 cycles versus having a more flowy strategy where you're sort of pivoting, watching what the people who are experts in the space are doing and sort of constantly changing?
Everyone's different. I'm in the middle of what you just said. I stick to the basics that have worked, and you need a little bit of flavors on top, to kind of supplement sometimes, like you can't keep the very same basic level of trading, in my opinion, and in my experience, all the time, but you'll keep the same groundwork. You'll have your car, you'll still have the same chassis, the same engine, but I'm just talking, let me change the color of the seats. Let me, add some LEDs inside, like nothing crazy, but it makes a difference. And so a bit of a hybrid, you need to, like I said, you need to be able to adapt.
Got it, Sam. Sam, do you day trade, weekly trade, swing trade over months?
Yeah, so I like to call it range trading. It's a really simple, boring way of trading, and it's literally just based on what I call liquidity gaps. So a liquidity gap would be, for example, Bitcoin up until like literally right now this month has never really traded between the levels of $25,000 and $30,000. That's a big gap. Like when Bitcoin first broke 25K, it shot straight up to 30K within less than a week. When Bitcoin fell below 30K, it shot straight down to 20, basically around there, and then came right back up within the same day. And then the next time we fell back down below 30K, we instantly fell down to 20 again within a few days. So that's a price range where we know historically the price doesn't really stick around. Like, it's not reasonable to expect, in my opinion, based off what I just said, that Bitcoin will fall to 27 and just stay there, or that Bitcoin will, if Bitcoin's at 20K now, it's not reasonable to expect that Bitcoin will go up to 26 and a half and then just stop, and then fall back down. It usually goes the whole way. So it clears a range, and that range is huge. 25K to 30K is a 20% range, if my math is correct, which again, in itself is not impressive, but with a bit of leverage, with 10x leverage, that can make you a lot of money. I actually traded that exact move I just described to you. I traded it down from 21K up to now 29, 180K profit. And I only, I put $100,000 into Bitcoin. If I bought Bitcoin normally at that price, I would have made nothing compared to what I did make. You play with a little bit of leverage, you play these gaps. That's how I like to trade. It's slow. That's why I said it's boring. Most of your life is waiting, almost like fishing. Like I said, if you're making money, you're probably taking money out of, someone who's impatient, out of their hands. But, the time will come. Obviously, those times always come. We do break key levels. It's normal. When we break $69,000, then everything is a range. Like we can top out anywhere. Like I said, 73, 75, 100, 200, I don't know. But we're probably going to have a nice big gap after that. The risk comes in, well, we could break 25K, but we could fake out. We could hit 25.5. That might be enough to tell me, all right, we've broken the key level. Let me trade this gap. But we reach 25.6 and then we drop back down. So we get a fake out. So that's where the risk comes in. And that's why you don't put all of your money behind a trade, because even if everything is amazing and you did the best analysis you could have possibly done, you could still lose money. And you don't want to, let that be a problem for you. So that's my style of trading. That means that I'm in trades for a few days or weeks every time. Never more, never less. Rarely less. Sometimes it does happen less, actually. And usually not more than days. It's unusual for me to hold a trade longer than 2 weeks. And I never, ever, 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 ever day trade, because you are competing against bots, and bots are smarter than you. That's it. It's that simple. Bots are just going to outcalculate you and completely screw you over 100% of the time.
Interesting. So, Sami, do you have like a daily trading schedule? What's your trading schedule like? Do you wake up 7 a.m. every morning and have that whole trader sort of routine?
No way, man. No way. No. I'm a different, I'm a lazy guy. I wake up when I wake up. You know what I mean? I go to the gym, when I'm ready. I come back, eat good food, hang out with friends. Trading is not at all any primary focus in my life in terms of like how much time it takes up. But of course, my mind is constantly thinking. Like I said, most of it is waiting, right? Like I have to wait until we break 25K. In this case, it took like 4 months, so I did trade in between that time. But, for the most part, if I'm waiting for that big, juicy, like what this trade is, this really nice big gain, if I'm waiting for this gain, I can't if it's going to happen on Sunday, what can I do on Monday, Tuesday, Wednesday, up until Sunday? I can't do anything. I just wait. I just make sure that I don't make a stupid mistake. I just make sure that I don't get trigger happy, and start getting an itchy finger where I just feel like I need to execute trades like a degenerate gambler, which is how most traders are. I just make sure that doesn't happen. So I make sure I'm working on other businesses, that I'm hitting the gym, that I'm spending time with friends and family and reading books, whatever. Just, moving forward in life. And then when the trading opportunity is there, it's like, all right, let's log in. Let's do some work, but that's it.
Interesting. What sort of notifiers do you have? Like if it hits a certain key point that you've been watching, do you have like alarm that goes off on your phone and wakes you up at 2 a.m. and then you're running to your laptop and seeing what's happening?
Yeah, I think alarms are the best way because it means that your time looking at the charts drops down to effectively zero. For me, I'm a YouTuber as well, and I'm just, I'm interested. So I look at the charts. Every time I open my phone, if I open my phone 100 times a day, I might look at the chart 20 times a day, and I'll just I won't even look at the chart. I'll just open the watch list, and I have a mental memory of where the price was because I know I literally checked it 30 minutes ago. So I'll just check the price and then, go back to Instagram or whatever, and that will be good enough. I think alerts are a better way to do it. And I think that's how most traders would make most money is if they just use alerts. And then when the alert is triggered, now we broke 25K. Okay, let me sit on the computer, make sure, the plan I set 2 weeks ago is still a good plan. And then I'll execute. So I think that's the best way to do it. As for waking up in the middle of the night, I mean, I do it. I do it more because I enjoy trading, not out of obligation. And a lot of the time I'll just kind of, I'll wake up, I'll see something's happening. I'll be like, all right, I can't be asked to deal with this right now. And I'll deal with it in the morning. And, if you had a good idea with your trade before you entered it, then that should be okay. And if you didn't have a good idea to the point where maybe you put too much money in or you didn't have enough confirmation or whatever, then yeah, you're going to wake up at 3 a.m., just to go to the toilet, but you're going to end up looking at the Bitcoin chart for the next 45 minutes because you're gambling. Because you're trading too much money, you're trading when you're not sure of what you're doing, yeah, you're going to run into a lot of problems.
So when you're talking about liquidity gaps, how let's say it breaks 25 and based on history, if it breaks 25, it will always go up to 30. It doesn't sort of go up and sit in between. If it took 3 months to get back up to 25 versus 1 month versus 6 months versus there was major dips, would that plan still stick based on what happened prior to get to that point?
Do you mean if it takes a long time to get back up to 25K?
Yeah.
So yeah, you're just playing the waiting game. It could take 6 months or 1 month, like you said, and it doesn't matter. You just you do your duty. You just wait, and that's the part that really upsets people, because they start trading. They're like, okay, I just opened my my Binance account. Let me push some buttons and make some money appear with magic. And that's not how it works. Yeah, if you need to wait, you wait, and you just shut up about it, and that's it. There's no nice way to say it. You just wait, and if you don't, you'll lose money. I promise you.
Now, when it hits 25, will your plan stay the same despite what happened prior? So meaning
yes.
Got it.
Well, if it took a very long time to reach 25K and now we're finally here, I'm actually going to be much more confident because if we've been in an area of low volatility where the price doesn't move much, and then we get up to 25K, it probably means we've left that area of low volatility and we have now entered an area of high volatility. And I'm talking about Bitcoin. I don't know about specific stocks and Forex pairs behave differently, but Bitcoin behaves in this way, where if it's been quiet for a long time, when it wakes up, it is a dragon. It is breathing fire and destroying everything in its path, whether it's moving up or down. So I'm going to be way more confident. If it's been a shorter space of time, I'm actually going to be more likely to have cold feet. I'm going to be like, all right, well, we did get back up to 25K, but okay, in this case, it was easy because we had the banking crisis and everything, and gold is going up and the dollar is dropping. So it's the perfect environment to be in Bitcoin right now. So it was very easy. But if the environment was different, if it turned out that actually corruption ended overnight and banks are suddenly no longer greedy pigs, bankers are no longer suddenly greedy pigs, and everyone's like nice with the banking system, then yeah, I might be a little bit less confident in Bitcoin if I get, you know what I mean? Like, it's a weird analogy, but different things will impact how confident I am in my trade, but waiting longer has been a good sign in my experience.
Got it. Now, different scenario. If they're both, like, let's say both 6 months to get to that point, one of the scenarios, it took 6 months, but there was a lot of dips back up, versus the second scenario, it just sort of stagnated for 6 months and then it got to 25. Would you still stick to the same strategy for both scenarios?
That's hard to say because even in the second example you gave me, we could have had a lot of dips, right? The dips just might have been smaller. Because at the end of the day, if you're going sideways, you're still doing this, right? Like,
Yes.
or you're doing like this and then like this, but you're still just kind of like, so it's either this or it's this, but you're still getting dips. If we're dropping lower, like, okay, if Bitcoin fell down to $9,000, then getting up to 25, you've already pulled the 2.5 times gain. So at what point, do you start saying, all right, look, maybe this is a bit too much considering we are still in a bear market, right? Even now when Bitcoin has pulled an 80% rally from its low to its high, like 15K to 28, we've nearly, more than 80%, we've nearly doubled, the low. We have to start out, like, we're still in a bear market. That's clear. We're not out of the bear market. We're not bullish yet. We're not in a bull market yet, I should say. So at what point is it like, all right, well, we've probably risen up by too much. 80% in a stock might be too much. For Bitcoin went from 3K to 14K and stayed in a bear market. Bitcoin pulled like a 5x gain and stayed in a bear market. So I think we've got a little bit more to go in that sense. If we dip lower, that's going to increase my confidence because that's telling me a lot of smart people have bought lower. It's telling me that this is the key thing, is that we've tested the lows, right? Like, if we've been below 15K, if we've been below 20K, and now we're back up to 25, that's telling me that the market really is done with those low price levels. That if we had the strength to get this high, then, it only takes one more fat-fingered buy order to send the market flying into an area where we already know there's no liquidity. We already know the market doesn't hang around in this area. It just zips straight up. It just teleports straight up. So dips are reassuring, but only up to a point.
That's super cool. So Sami, you take in everything to account. Like, you sort of have a general rule where it's like, with the liquidity gaps, you sort of know what happens, but you sort of definitely take into account if it took 6 months, 1 month, if there was a lot of dips, if there was less smaller dips, you take into every account and then you sort of adjust your plan a bit.
Yeah, but I want to make it very clear that if you don't do those extra things, you'd probably still make a lot of money following a simple strategy. Because this is assuming that you're not being stupid with your risk management and stuff. You're putting a sensible amount of money into each trade. You'll still probably make a lot of money. Taking these other factors into account are more a function of me just genuinely being interested. And also, if I'm at a 60% success rate, I want to do this extra work to get up to a 64%. Again, these numbers are abstract. I don't know my success rate. It doesn't matter. But I want to get that extra edge. Like that extra edge at a large enough trading volume will make a real difference. It might even tell me, as it did on this occasion, that I can enter significantly earlier than I planned. Right? I originally planned on entering this trade at 25.5, but I entered at 21.5. So I got a way better entry level just because I was paying attention. So, you don't need to. I still would have made a lot of money if I went long above 25. I made a lot more because I was paying attention. So I think that can be helpful. But always at the beginning, you just want to keep it simple. You want to get to grips with how it feels to make a mistake and lose money, and to get numb to it. Basically, I think is an important part. So you don't want to complicate it at the beginning.
Got it. And Sami, is there any way to make money when the price goes down? Is there like any options like shorting? Can you short Bitcoin, and how does that work?
So that's like I said. I mean, from like 7K down to 6.3 with that analogy I gave earlier, that's a 10% drop. I can go short on Bitcoin, which means let me get this right. It's complicated the way to describe this. When you go short, you are borrowing the asset from the exchange and then immediately selling it. And you're keeping that cash. And then when the price drops, you're buying that asset back with the cash that you used to borrow the asset. You're buying the asset back, and the difference is yours because you got a discount on the asset. So let me put numbers on this. I'm buying $100,000 worth of Bitcoin at 7K, and then I'm instantly selling it. So I own 0 Bitcoins and $100,000. Now the price drops down to 6,300. Each Bitcoin is 10% cheaper. So to buy back the same, what is it, like 15 Bitcoins, I'm spending 10% less money. So I'm spending $90,000 to get the same 15 Bitcoins. I don't know if my math is right. It doesn't matter. I'm spending $90,000 to get the same amount of Bitcoin back. I give the Bitcoin back to the exchange and I keep the difference. I keep that 10K. Does that make sense? Is that complicated?
Is there any leverage in that, or is it all zero leverage?
That is with leverage, yeah, because I would be, this is the thing, is you can't go short without leverage, right? Like what happens when you go short without leverage is you sell. That's selling, but you don't make anything, right? Like if Bitcoin goes from 7K to 6.3 and then you rebuy Bitcoin, yes, okay, you have, 1.x Bitcoin instead of just one, but you're not making any extra dollars.
Right.
So that only becomes interesting if Bitcoin goes from 6.3 to 12. Now, okay, now I have 10% more Bitcoin, so that's good. Instead of making $200,000, I'm making 220, for example. Mm-hmm. That's nice, but you don't make money from it dropping unless you use leverage. Yeah, and this is the hardest concept to describe. Yeah, but this is as far as it goes in terms of difficult to understand.
Okay, cool.
You don't even need to understand it. It doesn't, it's not required. I didn't understand how leverage actually works until, a long time. It's not necessary. You're selling an asset and buying it back cheaper. That's what happens when you go short.
Got it. And then when you're sort of doing that selling and buying, and if you do buy it cheaper, who's making the loss? Is it the people who are longing, or is it the exchange because they're lending you something that now has gone down in value?
The exchange doesn't make a loss. You're always buying and selling, with someone else, peer-to-peer in that sense, but through an exchange. So you and me are trading, but there is a middleman, the transaction. So the exchange, that's too oversimplified, but kind of works for this example. So the exchange never loses money. They're charging you a fee. When you borrow that money, you're paying a fee, which might be like 0.1%. And to keep your position open, most exchanges, every 8 hours, they charge you a fee just to keep it open. And that will be a fee on the total trade size. So if I put 10K in with 10x leverage, I'm paying the fee on $100,000, not on 10K. And that fee might be, 0.05% or whatever every 8 hours, which, if you keep your position open for many 8-hour periods, that fee is going to rack up. But as for the guy that's losing money on the other side, it's you would never meet him. It's or her. It's an exchange. So
what happens if there's just way more people shorting than longing? How do they fulfill it if there's like a mismatch?
If a lot of people are shorting, which happens all the time when the market is crashing, if a lot of people are longing, which happens all the time when the market is rapidly rising, you're just going to have a very thin order book. So an order book is every trader on the exchange puts in an order of, I want to sell X amount of Bitcoins at 30K, Y amount at 31K, and so on. That creates an order book. We have an order book with bids, so everything lower than the current price, and order book with asks, everything above the current price. The order book is going to be very thin, potentially, in the example that you're describing. So there's not going to be many bids. People aren't bidding to buy because they're scared. So everyone that's selling is rapidly crashing that order book. And the bids are just evaporating. You go from 25 to 24 instantly. It's the same way we go from 25 to 28 so quickly because nobody wants to sell. Everybody's bullish. Nobody wants to sell. So the only thing we have right now are buyers, and there are very limited asks. Nobody's asking to sell Bitcoin at 27, 28, 29. Everyone's trying to sell at 30. So the price very quickly goes up. Here's where it gets interesting. That's like basic analysis. In the current present day world, we have bots that are designed to screw you over. So if everybody is going long, what generally happens is we'll crash. Some fat-fingered sell order will hit the market, crash. So everyone that's trying to go long has their stop loss or their liquidation level. They get shut out of the trade. They get forced out of the trade. And the only way to close any long position, or in this case, many long positions, is to sell. If you bought Bitcoin and you have an open position where you're holding Bitcoin, the only way you can close that position is by selling it. So now you're selling and you're forced to crash the market even more. So this is what's called a long squeeze. If too many people go long, we get squeezed. Where the market drops down to a key level, that key level triggers long positions to get closed. And the only way to close a long position is selling more. So order book just keeps dropping down. Then everyone's scared. The dumb people go short. We've got the sharks and the sheep. The sheep go short. Everyone's getting scared the market's going to crash. And then we go back up. And that's our deviation. Our deviation happens down here. Everyone gets tricked. Then we go back up and the market actually moves. And so what we're doing there is we're clearing liquidity. I say we, I'm not doing this, but the exchange or whatever, brokers, Illuminati, whatever, they are, stopping you out of your position, collecting those trading fees, collecting that liquidity, and then taking the market up and doing what they wanted to do with it in the first place.
Sami, I understand how there's order books when you just buy and sell Bitcoin. Are there also order books for leverage trading and order books for shorts and longs, and those are completely different sections of Binance?
Well, yeah. So you've got spot and you've got derivatives. And up until very recently, you can't, I don't even know how it works. You can't use leverage on spot. I don't know how it's an industry standard now. I don't know how it works, but you'd be trading leverage on a derivative pair, which would have a separate order book, which means that it's almost like I come to you, I run an exchange, and I'm like, hey, come trade my Bitcoins. I wrote down Bitcoin on paper, and this represents a Bitcoin. Do you trust me? And you're going to say, yes, I trust you, because 10,000 other people are doing the same thing. So we just kind of make it work. And then as long as you're with a legit provider, legit exchange, it's not going to be a problem. So you're trading a completely different, made up fantasy thing that correlates very tightly with the real price of Bitcoin, because if the difference deviates too much, arbitrages enter the space. Arbitrage trading. This is where gold is more expensive in India than it is in DRC in Africa. So I'm going to buy it in Africa and sell it in India, to pocket that difference. I'm not doing any work. It's extremely easy. If Bitcoin is trading at 25K on Coinbase, but 24K on Binance, I'm going to buy it on Binance, send it to Coinbase, and sell it there. And in this way, any discrepancies get evened out. While you are trading a completely made up derivative, it's derived from Bitcoin, it will very closely hug Bitcoin's price action. Sometimes we get differences where, the derivative pair trades $300 lower than the spot pair, and that can also give you an edge. That can tell you, okay, well, leverage traders are selling Bitcoin pretty aggressively right now. What kind of leverage traders? Is it retail or is it top traders? And we can look at that data. If it seems that retail traders are excessively short right now, and Bitcoin is at a nice support level, and it looks like it could bounce, then okay, maybe I want to buy some. But if top traders are aggressively short and retail traders are aggressively long, well, guess who's generally going to be right?
Got it. Are bots trading derivatives or spot trading?
So yeah, derivatives are, you're trading gold, buying physical bars. That would be the equivalent of spot, and then versus trading it on your brokerage account with a bit of leverage. That would be you're not trading gold. You're trading something that is derived from gold. So that it's you can't leverage physical gold, but you can leverage paper gold. So you're trading something that's derived from the main asset.
Got it. And what are bots usually trading? Or where do you usually see the bots?
Oh, wow.
You see them everywhere. Bots are everywhere. Most of the trading happens with bots, especially on lower time frames. Yeah, bots are trading everything. Anyone can make a bot. Anyone can plug that bot into any market. The bot just starts executing trades.
Interesting. And what are your thoughts on bots? Like, you're right. Like, they could literally make 0.05% gains every 2 hours, and over a year, that adds up to pretty decent returns.
And you want to aim for small returns. 1% every single day for a year. It's a Japanese word, kaizen, I think it is. You're making a 37 times increase after a year if you're making 1% a day. So you want to go for the small ones. I'm sorry, what was your question about bots?
One, what are your thoughts on it? And two, actually, how do bots crash buy books? Like, for example, as a normal dollar cost average trader, like I'd put $5,000 at every resistance band, and every time it drops, I buy 5, so I'm happy. And if it drops further, I'd buy more, so I'm happy. But what are the negatives? Or like, how does a bot crash things and stuff up the market?
So first of all, how bots will trade depends on the person who makes the bot. I could, there are things called moving averages, which are literally, I could have a 20-day moving average, which on the current day will look at the previous 20 days of prices, and it will calculate the average and it will put that on the current day. So that gives me a nice smooth line tracing the price action. I could say that in an uptrend, every time the price falls down to that line, I buy. I can automate that and put it on a bot, and that's it. Or it can be much more advanced. That's how bots would do it as a basic example. Now, bots might do it very differently. Bots might not even use, if you analyze the sentiment of Elon Musk's tweet when he tweets about anything related to dogs, if it sounds like a positive thing, the bot could just instantly buy Shiba token, instantly buy Doge token. so it doesn't have to be based off technicals. So that's how bots work. And then the second part of the question, sorry, what was that?
How does it, like, how you talked about how sometimes bots would come in and they would manipulate the market and crash buy books and yeah.
So what you're describing would, we're talking, I think, primarily about liquidity grabs. I don't actually know a lot about how it works. This is stuff that happens behind closed doors. There's not a lot of information available to the public by design. Obviously, they wouldn't want you to know. But primarily, the way this is going to happen is, you'll have one fat-fingered sell, fat-fingered buy, whatever, just a big buy or a big sell, and that will panic the market. Other bots will try trading it, humans will try trading it, and then we'll find a direction. The direction might be down, and they might kind of trigger a move like that. But there's a million ways that that a bot can influence the market. I, in my experience, haven't found it hugely beneficial to learn about them, other than to learn when bots are active. Because when bots are very active, the market is too dangerous to trade. And that happens when there's less liquidity in the market, which is another way of saying that happens when people are not trading. When humans are not interested, the only things remaining are bots. And bots can generally, you can tell if you've been around for long enough, when a bot is trading just based off the way the price is moving, which, for example, might mean big spike up completely sideways and a big spike down, and then you have Bart Simpson's head. And that would be, a human wouldn't do that. If it was human trading, we would slowly go up with dips and stuff like that. Might mess around a little bit at the top, and then maybe have a fake out and then come back down and then slowly trend down. But bots are just sometimes the bots are a little bit more concealed than that. So it's a big question mark. Nobody really knows. Fortunately, charlatans don't even claim to know, so that's nice, because it's unless you're the one that made the bot or is in control of it, you're not really going to know. The way these bots work that I'm describing are illegal in like most stock markets and stuff. They're a real problem. But in crypto, there's no regulation, right? So you can just do whatever you like.
Sami, when there's those big trigger buys and sell, let's say a corporation comes in, they buy like a bunch of sell limits and it brings the price down, and then they just clear a bunch of sell limits or sell orders. How do they have confidence that it's going to dip back up and they'll be able to buy or sell? Like, how do they know it'll dip back up and they'll be able to make gains from what they did?
So it will be from the same things we're discussing. They'll do their own analysis and they'll form their own ideas. But a lot of the time, they don't need that second move to happen, right? Like, that first move is enough. Think about it. If you're an exchange and you get paid every time someone opens or closes a trade, but you get paid more if they get liquidated, or you get paid more if they use a market order as opposed to a limit order, which means I go to the exchange and I'm just like, sell right now. I don't care what the price is, just sell. Give me the best price possible. That's a market order. A limit order would be, we're at 25, sell at 25,010. So I'm a little bit more specific. Now the exchange is doing less work for me. The fee for that is lower. A lot of the time when people are getting stopped out, they're using market orders. And when you're getting liquidated, you're only using market orders. So you get paid a higher fee. So all you need to do is start the crash, and then you get paid for it. I want to be very clear. No exchange will ever admit to doing this because it's highly unethical, but it's very obvious that it happens. My exchange of choice is Bybit. Love them, been with them for many years. They might not do it. They might not. I don't know. They might not do it, but it will happen on other exchanges. So the same price action will probably happen on Bybit too, because if it didn't, we would have an arbitrage opportunity and we'd just get evened out. Bots do a lot of that arbitrage work, by the way. So don't even bother. If you're human, don't even bother. Because bots will do it faster than you.
Do you think bots would kill all technical analysis? Like, let's say someone has a strategy.
I've been hearing this for years. Maybe with AI, but I don't. It hasn't happened yet. I mean, humans are still making money. I've heard it for so long, man. I know one guy who I love very dearly who used to be a trader, and he stopped partially. One of the reasons he stopped was, because he was concerned that bots have already made it too hard and that they'll continue to make it too hard for humans. And when you do that, I didn't stop, and I'm, what I mean? Like, not in a cocky way, but like, you can choose to be scared of bots and then not make any money, or you can choose to be wary of bots and understand how they work and then still risk your capital in safe ways, and then maybe make money or maybe lose money, But I'm not concerned about bots right now. I think with AI, it's very concerning. ChatGPT is probably just months away, if not weeks, from having really good integration with real-time data. Right now you can already use Bing. You can already write and read from the web in real time with ChatGPT plugins. So it's changing. It might even not work by the end of the year, but I've been hearing this stuff for a very, very long time, and people have been talking about this for decades. Trading has become harder, no doubt. Trading has become harder as a result of bots. In some areas, like short time frame trading or day trading, it's as close to impossible as you could get. I don't know how people make money day trading. I'm fairly certain they're all lying, unless they're, one of those types that I told you about before. You're very, socially awkward, gifted, talented traders that just kind of like come out of the womb and just know how to trade kind of thing. Those guys, obviously, they'll make money as day traders, but normal people won't. So bots have made it more difficult, but I'm not concerned about it right now. But I didn't let you finish your question, so sorry about that.
Totally fine. I was just going to say how, like, if someone always trades between, if there's like a 1% gap every single day, let's say Bitcoin's at 20,000 and it goes up to $20,050 or 20,100, and they keep buying and selling during that gap, couldn't a bot just come in and just sort of buy and sell $1 before that, and then and then bots would just keep doing that, and all of a sudden no one has any gap to trade?
Yeah, they could, but it hasn't happened yet.
Yeah.
And that's a pretty simple way that a bot could out trade you, front running basically.
Yes.
Front run you. That happens, but it doesn't invalidate trading ranges. Trading ranges still exist. Right now we've been sideways for 12 days between 26.7 and 28.7. So bots didn't screw that up. If you I don't think you could have reasonably known to buy at 26.7. That is not a particularly smart area to buy Bitcoin, in my opinion, but it was smart to sell at 28.6 because we knew that's a resistance area just because of prior stuff that happened on the chart. So you could have just been shorting every top, with 10x leverage, and then you have a rule that every time you make 20%, you just close and go home. So yeah.
What's your thoughts on Bitcoin to $1 million in the next 90 days? Have you seen that guy?
Yeah, Balaji. Look, here's the thing. Bitcoin isn't going to go to $1 million because of extreme levels of demand alone. Like when people talk about $1 million Bitcoin, they're thinking everybody and their nan wants to buy Bitcoin. Everyone's dog also wants to buy Bitcoin, and it's just the most exciting, glamorous thing ever. Everyone's using it. It's paradise. Lightning Network works. All that stuff. Bitcoin is not going to reach $1 million that way, at least now, because you need a very big public opinion change. Like the world would have to collapse for Bitcoin to even have a chance. Yeah, that's the other part. But there's two things here. First of all, yes, a lot of money would help to take Bitcoin up to $1 million. But see, the last time when Bitcoin fell from 64 to 30 and went back up to 69, that leg from 30 to 69 was not driven by buying pressure. It was driven by an absence of selling pressure. So if we go back to the order book, if the order book is very thin and you don't have a lot of asks, you can easily take Bitcoin anywhere. This is why shitcoins pump 500%, 5,000%. It's because nobody's selling them, right? So if nobody's selling them and you have a little bit of, sustained buying pressure, like if I want to buy 1,000, it's not much. If I want to buy $1,000 worth of Bitcoin, but each ask for Bitcoin is only worth $50, every $1,000 gap. To spend all of my $1,000, I would shoot the price very, very high. But I didn't actually buy I didn't actually put a lot of dollars behind it. So that's what happened the last time Bitcoin went from 30 to 69. And it's the reason that I was very wary of a market top. And it go on.
When that doubled or tripled, did the market cap also double or triple, or does it not necessarily have to correlate to market cap?
Market cap correlates for sure with Bitcoin specifically because Bitcoin has a fixed supply that nobody can mess with. So market cap is just a calculation of price multiplied by circulating supply. So gold, for example, is the price of gold multiplied by every ounce of gold that we know exists. And that's how we get the 12, 13 trillion market cap. So that doesn't change, with a shit coin where, or XRP, which is a brilliant example of a shit coin, like that, you can just like print XRP anytime you like. And so, yes, circulating supply might change, market cap might, get messed with a little bit as a result. The thing, linking this back to $1 million, like, yes, a lot of people could buy Bitcoin, or a lot of people could just choose not to sell Bitcoin and we'd still go up. But the catch is that if you don't do it the right way, with organic buying pressure, that means you've had no selling pressure. And if you have no selling pressure, it's not going to stay that way forever. Eventually, that selling pressure came back when Bitcoin was at $69,000, and we crashed really hard because the whole time the market was going up, it never experienced any real selling pressure. There were no real buys sustaining this price action. So when a modest amount of selling pressure re-entered the market, it just crushed the very limited buying pressure that existed, and we got big crashes. So that's like two reasons so far for why we're not going to $1 million soon. But the other big one, and Balaji's main theory, was hyperinflation, or just very, very large. It can only be hyperinflation. The problem with this is, if you got $1 million Bitcoin anytime soon, you'd probably also have a $10,000 loaf of bread. Inflation would just be really bad. So in addition to your money being worth less, like, okay, yes, your Bitcoin's worth $1 million now, but your money is worth 10 times less as well. So it's kind of just like it's worth $100,000. In addition to that, you now have rampant crime and everybody wants to kill you and rob you, and society is collapsing and unemployment is through the roof. A 90-day $1 million Bitcoin is only something to be celebrated if you are ignorant or a psychopath. There's no in between. And I think Balaji falls into the psychopath territory in this case, to be honest, because he says he doesn't, he says he's not happy about inflation. Nobody likes to see rampant inflation, but a lot of Bitcoin holders are fucking weird, and they would just celebrate society collapsing, to see a higher price of Bitcoin. We're not getting there without hyperinflation, and nobody wants hyperinflation because it's bad for the world. If it's bad for America, it's bad for the world. Everyone's going to suffer.
Wow, you helped me realize that there's so many variables with the price. Like, what's the market cap of Bitcoin at the moment, Sami?
540 billion, I think.
Got it. So if it had to go, like, if Bitcoin were to go from 30K to $1 million, the market cap would have to like go up to like more than 10 trillion. So all the gold's money, even that's not enough to get Bitcoin to $1 million. But it's not as simple as just putting money in. Like, people are holding, so like the supply is like, that's what you're selling, right? You're buying and selling the 10% of people that are willing to buy and sell. So like, there's so many variables, not just the market cap, right?
Yeah, it is. That is the case. And I'm just trying to do some quick math on this right now. I can't even read the number, but a market cap for Bitcoin at $1 million is 1 million times 19 million, because that's currently roughly the circulating supply of Bitcoin, which puts Bitcoin at $19 trillion market cap, which makes Bitcoin about 50% bigger than gold. And in an event like that, gold would probably rise up as well, obviously. If the dollar is crashing, people buy gold, right? It's always been that way. So
with that 20 trillion, does it necessarily have to have $20 trillion of money go into Bitcoin, or is it not that? Got it.
So this is the thing about market cap and why it's misleading. If you have an illiquid market where people aren't trading, like, you could have a shit coin that you launched yesterday, and I could sell it. You could sell it to me for $50, but the circulating supply can be 10 billion, and now we got to multiply $50 by 10 billion. But what's that? 500 billion market cap. Now your shit coin is worth exactly as much as Bitcoin, market cap wise, but it's just that no one's trading it. So it's an illiquid market. So market cap is a misleading number for that reason. But as long as you know that, you can reasonably use market cap to, you wouldn't use market cap to understand how big a shitcoin is because it's manipulated. But Bitcoin, although it is manipulated, is much more liquid.
Got it. So that means when people say, in order for Bitcoin to go from 30 to 60K, there needs to be $500 billion entering the market for that to do so, that's not true.
I never understood where this came from. It really confused me.
Yeah.
I mean, put it this way: if you put 500 billion, you'd look at the order book right now. The order book right now, with people asking to sell Bitcoin up to, say, $100,000. If you wanted to instantly send Bitcoin flying up to $100,000 now, you'd have to put in X, call it $500 billion. If you actually deployed the first 100 billion of that money into the market, bots would react. You'd have more sell orders, for example. And all of a sudden, your $500 billion would only take you up to 35K, and then arbitrages would bring the price back down because you only bought it on one exchange. So every other exchange is still trading at 30 or 28. They'll just kind of arbitrage it back down, and then maybe you end at like 29, 30. which is why, when you have very large amount of capital, you want to you don't want to spook the market. This is what you don't want to spook the market. You want to deploy that money sensibly.
Got it. Sami, what's been your main focus at the moment?
Fitness, life. I'd say those things have been the main focus. Trading, for example, is always just kind of like as and when. I'm not in control of when I can trade. I just wait for the market to give me something nice. So it's never my primary focus as far as what my time goes into. It's always just kind of lately it's been eating clean, living a good life, traveling. Just came back from Japan. So yeah, stuff like that.
One thing, is it like a common thing? Like, I was surprised you were talking about how trading is like 90% of your revenue. Like, it's not common for influencers to have 90% of their revenue come from the thing they teach, right?
Yeah, and if it was skewed the other way, I'd be much richer because there's way more money in being an influencer than there is in being a trader. Um, at my stage, because I mean, even though I'm trading with $100,000, still not that much money. There's a lot more money in being an affiliate marketer. Most YouTubers that are in the crypto space are just affiliate marketers. They understand the basics of TA, so they sound smarter than the bottom 80%, and then they sell them stuff. And they get big sponsorships. They get insider information. They get access to closed opportunities that normal people don't get, and they make crazy money from that stuff. That's just how it is. But I like being a trader, and I like what's the word? It's not sincerity. I like knowing that I'm not doing something that's a lie, basically. It's a big deal. Like all the top influencers are, I mean, it's not even close. I mean, like in terms of what they make. But, it's just how it is. Yeah.
Interesting, Sami. Do you see yourself just trading daily and sort of slowly increasing the funds you can manage, and then sort of just keep compounding that to the $50 million mark where you can get the private jet, can get the yacht, or do you have to pivot?
No, that's the plan. That's the plan, is to keep trading, and I'm running my businesses anyway. So the businesses fund my trading account still. It doesn't really need to happen now, and now I have a bigger company, got to pay staff and whatever, R&D, developer costs, whatever. But I'm a businessman too. Being a trader is basically being a businessman anyway. It's being a psychologist in a sense too, and so I wear a few different hats. My path to 50 mil will be a combination of trading and businesses.
Got it. And then, like, if you were to sort of just trade and make 10% gains every single year, it would take a very, very long time to get to that $50 million mark. You'd have to do 50% returns every year, keep compounding, duplicating, tripling your money. But then I think Warren Buffett said apparently, like, big firms, hedge funds, like, they can't, like, if you put money into the S&P 500, it will outperform 99% of like big quant firms and hedge funds. So like, what's missing? Like, how do you get to that big mark, and how do you consistently do those crazy turns when these big firms can't?
I don't know why people give their money to those companies, to be honest. I am very strongly against that philosophy. As a Bitcoiner, I believe that everybody should have complete custody of their funds, because otherwise someone can steal it from you, like the bank or the government, and or an ex-wife or any number of other things. You could, whatever. You should have custody of your money. Like, it's kind of, to me, it's very obvious at this stage. But I mean, for most people, they don't even think about it. They just kind of follow the system that they were shepherded into. With their parents and teachers and so on. And an extension of that is, yes, okay, now you're taking custody of your funds, but you should also be fully responsible of what happens to your money, which means, like, you got to educate yourself, which kind of sucks. But money is a big part of most people's lives, so spending, 6 months studying what money is, the economy, understanding how the Federal Reserve works, understanding supply and demand, the psychology of markets, isn't a big ask, I think, for one lifetime. You put aside a good amount of time to study it, read books, maybe buy a course, whatever, it doesn't really matter, but to learn, I think that's important. And I think that's what would be suited to most people, is taking more independence and responsibility of their money. As for, why big companies don't do it, don't achieve good returns, a lot of them are working safely. You got to imagine, if you're a big family that's got $100 million in a family office, you're not gonna want them to take big risks. When you want to take big risks are when you don't, is when you don't have money, when you start out from little. So, then, while the S&P 500 might make that 8-10% a year, again, I want to make that 8-10% in a few hours, right? I don't have $100 million where I can comfortably live off, half of my interest, half of my $8 million profit per year, so I can just kind of comfortably live off 4 mil. I don't have that starting point, so I'm trading more aggressively. And yeah, then when you have more money, you have more to protect. So you want to put it in a safer place.
Got it. And I'm also assuming that if your capital 100x and you're still trading the same every day, you're gonna affect the movement of that one asset you're trading. So that's why you can't just like do it at a big scale.
Yeah, so that's liquidity issues, and that's where I was mentioning you got to be careful about how you deploy your money. But you're not going to have that problem for a long time. You have to have a lot of money to affect Bitcoin, for example. Okay, obviously, again, a smaller coin will be less liquid. Even Ethereum, is a lot easier to move than Bitcoin. That's why Bitcoin moves up 2%, Ethereum moves up by 4%, for example. It's just less liquid. It's more volatile, and it's smaller, so it's riskier as well. So you would take these things into account.
So Sami, is there any bottlenecks? You know how you were talking about how, you don't want to make 5 to 10% of a year. You'd want to make that in a day, a few hours, a few days. Can you just keep doing that forever? Because that's like hundreds percent of returns a year. Is there any bottlenecks? Would things change when you have larger capital? Why can't you continue doing that when you do have larger capital? And why aren't people doing that?
With what you just described, it would be hard to find a bottleneck. You'd have to trade with incredibly large sums of money. I guess the problem you could run into is when you trade with really large sums of money, and I'm talking more than $1 million for leverage in Bitcoin specifically right now, 2023. This will change. The number was smaller before. The number will probably be bigger in the future. You might run into problems where your orders are so big that bots start to recognize them, and your exchange for it. We're almost diving into conspiracies, but I know for sure that this happens anyway. Where if you're trading very well, your exchange might start looking at your account and being like, all right, this guy's jumping in with $1 million before leverage and he's always getting it right. Maybe we can trade with him or fuck with him a little bit, So that kind of thing does happen. But I'm not qualified to talk about it because I haven't run into that problem yet. I know I can count on one hand the number of people I know that run into this problem. And it's not the hardest thing Bitcoin's not gonna, for example, if it goes from 25 to 30, you're probably gonna have a few chances to buy, right? You just be more careful of how you deploy that capital, maybe 500K here, 700 there, for example. So the game does change a little bit. And also, when it becomes too much of a problem, then you stop looking at Bitcoin and you start looking at the S&P 500, for example. You start looking at Forex pairs where there's way more, and in a Forex pair, a major Forex pair, USD Euro, for example, you don't need to worry about liquidity. You just don't need to worry about liquidity.
Interesting. So right now, let's say you risk diverse, like 30% of your portfolio or something, and you play with 100 grand every single day. You can't do the same thing and you can't play around with $1 million every single day. That would cause liquidity problem, would it?
Again, it depends. I haven't tried it, so I couldn't tell you. But again, it could just be as simple as instead of putting $1 million order in, you put a 500K order in, and you do it twice. Like if I'm trading a smaller coin with $100,000, I'm gonna buy $5,000 every 3 hours, maybe, instead of just market buying 100,000, because obviously that would send the order book flying, and then bots would it'd just be a mess. You'll just break it up a little bit. There comes a point where even when you break it up, it's still too big, and if that's your problem, then I'd rather listen to your podcast. I'd rather listen to that guy speak, because I'm just not qualified to speak on that.
Got it. Sami, are you sort of running all this on your own? Like as a trader, you don't need other people, do you? It's like a one-man show.
No, yeah, that's kind of the best thing about it, right? Like you almost have no earnings ceiling and no boss. The upsides of being a trader are amazing. I have a few people who kind of contribute to my analysis. I have one main lead analyst who I love very dearly, who is basically an older, wiser, more conservative, more risk-averse version of me. Him and I have almost exactly the same trading style. We have almost exactly the same ideas very frequently. We just trade in the same way. So I run almost every idea I have by him, almost just as a friend. We just talk about the market, and he will. For me, it was an important point, like from a businessman's point of view, where I want free time. So I thought, I might think of a trade, like I want to buy Bitcoin above 25K, but I can't be bothered to feel it out and look at the numbers. So I'll just kind of text him. I'll be like, yo, what do you think about this? I want to put a stop loss here maybe, or, what might be a good, level for, profit target. They'll just kind of write it out for me. I'll look at it, and I'll tweak it the way I like, so that's quite helpful. He also brings opportunities to me. So for example, I don't look at altcoins very much because I don't like them, but I'll still make money off them, of course. So I'll, he might bring up AVAX, Avalanche, which like there's absolutely no reason, Avalanche, I don't know how you say it. There's no reason I'd ever look at it, but he might be monitoring it and bring it to my attention. So that's helpful. But yeah, one-man band is the way to go, I think, for most people. The less people you talk to, the better, for sure. The less Telegram, Discord communities you're in as a trader, the better, for sure. The reason I say this is 90% of traders lose money. And I promise you, if you can join a Discord group or even pay for access to one, you're probably still among that 90%. You want to distance yourself from them. In fact, you want to feel like you're disagreeing with them a lot of the time. Right before I made this very profitable position, I was saying Bitcoin's going to go up for a long time, and people started to hate me for it. And Bitcoin started to drop. It went from 25K down to 20K, down to 19K, and everyone was laughing at me, and I had like the whole fucking world against me. Really, really nasty sentiment on my YouTube channel. And what I always say at times like this are, I'm not coming on, this video to make friends and stand in a fucking circle and, pat each other on the back to Bitcoin going to $1 million and typing in, we're all going to make it, and bullshit like that. I am just here to make money. And I understand that if I can get on my YouTube channel and I find that 90% of my viewers agree with what I'm saying, that I'm probably wrong. Not to say that the viewers are stupid, but we are retail at the end of the day. We are retail, and we are probably going to get it wrong. And if instead I log on and I'm saying, even while the price is crashing, that I'm still expecting Bitcoin to go up, and everybody hates me for it, well, I'm not here to agree with you. I'm actually, if anything, I'm not, but if anything, I'm here to disagree with you. I want to know what you think I'm so wrong at, so I can specifically do that. And that's why it's really important to insulate yourself from other people, if anything, because you don't want to be, you get a sense of, this is the thing, is a lot of people join trading as a lottery ticket, or they think that, okay, I'm trading, let me have a sense of camaraderie and brotherly love with my Discord community that's also trading, so they all kind of get around and they're talking about trading, and then, they have a random chat where they send in the memes, and now they've got, friends that they meet up with, and that's cool. That's really cool. Good for you if you've got friends and, you've got like all that cool stuff in the trading space, but it's not the way to make money, to sit around and discussing these ideas, like the correct way, in my opinion, is you just learn everything and then you practice it for a long time. You internalize it, you go through the stages of, losing money and getting used to, how it feels to risk capital, and you kind of do it solo. I can't speak to many traders who have done it as part of a group. It's not necessary.
Sami, in that scenario where you were predicting Bitcoin to go up, but it kept going down and everyone was sort of laughing at you, did you have any orders open on that prediction?
No, I bought a little bit late. Bitcoin fell to 19.7, which is where I said would be a really good area to buy Bitcoin because we had a moving average there. Remember, I said past 20 days of price action. So we actually had, I think, a 200-day moving average down there. Which is a phenomenal buy level historically and a phenomenal sell level if we rise up into it. If the line is here and we hit it, great sell level, or if we fall down to it, great buy level. But I was a little bit scared. That's the truth of it. To make a long story short, I was a little bit scared. I didn't feel comfortable until Signature Bank collapsed. And when Signature Bank collapsed, the following minutes I entered my long because Signature Valley collapsed a few days before that. And that already started to kind of be a good thing for Bitcoin, and Signature Bank collapsed and gold was going up at the same time. And I was sat in a shisha bar with one of my boys and I was like, bro, this might be the time. And I entered the trade. I looked up to say, I've entered the trade. I looked back down, $15,000 in profit in 5 seconds. It was insane. Yeah, that was like the fastest gain I ever made, like in terms of 15K. That was pretty impressive. And that was
it a leverage or was it like a long?
10x leverage at 21.5. I entered with, it was like 112K US. For me to make $15,000, the price would have had to go up by 1%, because I was using 10x leverage. So the price went from 21.5 to 21.8, probably something like that.
Got it. Yeah.
And I didn't. The reason I didn't enter any trades, it wasn't because of community sentiment or anything like that. It was just kind of like, well, what if I'm wrong? What if we dip a little bit more before the right time to buy? And bottom line, it doesn't matter. Like I was a little bit late, yeah, but does that matter now when we're sitting at 29? Like if I entered at 21.5 as opposed to 20, or if I entered at 23 or 24 or 25, I still would have made a lot of money. It's not about home runs. I've got onto my YouTube channel multiple times since this position opened, and I said, look, okay, yes, I'm in a really nice gain. I love it. I like seeing, 200-300% profit numbers. It's nice. It's a nice, it feels good to me. But at the same time, I'm not aiming for this. I'm aiming for the easy reproducible 20%, 30%. I'm not able to pull a 300% gain every day. And I know if I aimed for it, I'd probably lose a lot of money in the pursuit of it, to the point where when I did make the big gain, I'd only be recovering my losses. So I'm more interested in the safer, easily reproducible 30%, 20% gains, because when you compound them, again, you're tapping into that real estate beauty of 25 years of compounded profits. Now it's fun, right? So I'm looking for that more than the big home run. If the home run comes, obviously I'll take it. I love the home runs. That's it's almost like they're chapters, and everything in between is just turning the page. So I love opening a new chapter, but I don't go rushing for it.
Got it, Sami. And with like leverage trading, with 10x, if the price dips more than 10%, you get liquidated out, correct? So you have to always wait until you know with high certainty that it won't dip more than 10%.
Yeah. So timing becomes a big, like it might have been smart to buy Bitcoin at 20K, but not the first few times, because the first few times we plunged below 20, well, not the first time really, because we plunged below 20, but the most recent time, if you bought at 20K, you would have been in a loss for a few hours. So it's timing. It's like you might have the right idea, but you might execute it 2 months early. And because you're using leverage, that's a problem. If you're buying spot, as long as you don't get scared when the price flash crashes down to 15.5, you don't actually lose any money. Yeah. But with leverage, it can only drop down to $18,000 and then I'm wiped out.
Yeah.
But I have a stop loss, don't forget. I don't want to suffer 100% loss to be taken out of my trade. I don't want to suffer more than a 30% loss, which means the price can only drop down by 3%, which in this case would have meant 19.4, which still would have worked because the price only fell down to about 19.7. But it's timing. But this isn't a huge issue, because as long as you're exercising good risk management, it always comes back down to this. As long as you're exercising good risk management, you could have taken the same bet on Bitcoin to buy at 20K. Bet is definitely the wrong word. You could have taken the same trade on Bitcoin to buy at 20K. And you would have been wrong the first 2, 3, 4 times, but the most recent time you probably would have made all your money back. If you let because the other thing now is like, okay, you're in a profitable position, don't close it early. Keep making. You need to let your winners run. You need to cut your losses short, but you need to let your all of the time you lose a lot. If you've bought 20K, if you went long at 20K 3, 4 times and you lost money every time, your confidence is going to be a bit shook. This is where it's a psychological game. You have to still be willing to commit with a high degree of confidence on the 5th time. And the 5th time might fail too. This is where it gets it might fail 50 times. But if you're trading, with a good, idea, then it shouldn't fail too many times. And then when it does work, you make back all of your losses plus a very, very nice bit of profit on top.
Got it. So the first 3 times it hit 20 and it kept dropping even below 18. And then that happened 3 times. And on the 4th time, it bounced all the way back up to 28. If it went up to 28, that's like a 50% return, and if you have 10x leverage, that's a 500% return,
which is a 6 times gain, and you've done all of that with a 25% success rate.
Wow.
Yeah, there's very, very different ways to trade for different people. People listening to this, certain ideas I've said are going to appeal to them more than other ideas, and it depends on your risk tolerance, your life, who you are. And this is just my way. This is the way I like to make money. It's probably the most simple way to trade. Or if it's not the most simple way, it's very close because it works. Why overcomplicate it? If you're already making money, just keep doing it, right?
Sami, what's your macro view on the economy and market at the moment? Do you feel like we're just going to recession, so you're just going to be shorting for the next 5-6 years?
As far as I know, the UK is already in recession. The United States should be as well. Recession is just 2 consecutive quarters where you don't get growth. Everyone's trying to redefine important things in the world, like inflation has been redefined by the US government. recession is now being redefined by politicians. Various other things like what happened in 2020 were also redefined. Let's not open that up. By definition, I think United States is already in recession. I know the UK is. As for like the next years having like a bad, I don't know, man. I'm a short-term trader, so I don't really. I'm just not good at that. I think that there's a new bit of data that's coming out in 2 days on inflation, so I want to see that. Up until like a few days ago, I was of the opinion that inflation is kind of done for now and we're okay. But that's not the case anymore, like as of a few days ago, because the Fed printed a lot of money and they literally just erased, within 2 weeks, they erased like 9 months of quantitative tightening, which means they erased 9 months of trying to tackle inflation. It was working. It was working for 9 months. And actually for more than that, it was working for like a year. And now they've erased a lot of that. So money has been printed, inflation is happening again. That's probably going to impact the market. This is different. This money is only going to banks to support them, basically bailing them out. But that money still is in the economy now, so that's still inflation in a sense, or will become inflation anyway. I mean, from the point that money is printed to the point that we see that with higher, with more expensive eggs, that takes a while, to happen. It's a lag, which is why, by the way, when it starts to get better, markets turn before that, because everyone's trying to front run everyone else, right? Like if I think inflation is going to get better in June and it's March right now, I want to start buying in March instead of in June, because by June we might already be 40% up, so we're trying to front run. I think that the dollar is going to continue to lose its supremacy across the world, and I think that a result of that will be gold will continue to rise. I think that if gold continues to rise and Bitcoin continues to fit the narrative of being digital gold, that Bitcoin will probably rise with it. And of course, because Bitcoin is a less liquid, much smaller market than gold, it will probably see some really nice gains as well if that happens. So that's my opinion. But I'm just not qualified to talk on it, so I can't speak on it with a lot of confidence. But that's how I'm positioning myself. I'm only interested in gold and Bitcoin right now.
Sami, what's your thoughts on borrowing money to trade and basically just add a multiplier to your gains every day? With inflation, making money free.
Well, you still got to pay it back, So I don't like that idea because it puts you in a weak perspective from a psychological point of view. Pressure is the main thing, but it's also like, a big part of not gambling as a trader is knowing what signs a gambler would exhibit and then not doing it. So, it's like a bit of awareness takes you a long way. If you know what to look out for in a drug addict or a gambler, for example, you can safely engage in trading, let's say. And as long as you stay self-aware of what a gambler would do, and if you start seeing it, you just shut your laptop and walk away, you're good. Most people can't and won't do that. In fact, they will justify their gambling tendencies and say that it's actually a smart decision.
Yeah.
You have to be very self-aware. This is the thing about trading is like, like in boxing, if you make a mistake, you get punched in the face. It's the same thing in trading, right? If you make a mistake, you lose money and you'll lose it very quickly. So does that answer your question?
That makes total sense. Like in my mind, I thought since inflation is at like 10% and interest rates are much less, you can borrow money for free, but that still doesn't take into account the whole psychological positioning, like gambling sort of mentality. That's a whole thing I just learned. Yeah.
Yeah. You just, let's say you borrowed 10K and now you're down to 8 and money is tight, and you got to pay it back. Otherwise, the repo man comes knocking on your door. You know what I mean? Like you are extremely likely to fuck that up.
Makes sense, yeah.
The biggest thing I would actually urge anyone to keep in mind if they want to trade is, okay, so if you're playing chess, you're gonna, like on chess.com, you're gonna play against people of your same skill level. If you're playing in a chess tournament, you're still generally around the same skill level. Poker, same thing. With trading, it doesn't matter how stupid you are, you're playing against the top players in the world. So if you're worried about paying for your family's medical bills and getting your daughter through university, and that's why you're trading, you're competing against the same guy that will spend $10,000 on chartering a yacht by mistake, and he's got that abundance of money, and you've got your perspective on money from a place of scarcity, and he's got his perspective on money from a place of abundance. He's just going to be more psychologically fit to trade, and he will take your money. Trading does not make sense, in my opinion, for people who don't have enough money to justify taking the risk. If you're starting out with a couple $100, even a couple $1,000, I mean, it obviously depends on what you want, right? Like if you'd be happy, to put in 3K and walk out with 2K, then cool. But if you're putting in 3K expecting to turn it into $1 million, definitely possible. Has happened many, many times. It's a lot harder to turn 3K into $1 million as opposed to 300K into $1 million. You know what I mean? You're just going to be taking on very large amounts of risk for more time, which means that you are more likely to make mistakes. So if you're in a position where you even consider stuff like that, you need to stay extremely far away from trading, in my opinion.
Got it. What I'm sort of realizing chatting with you is that it's such a game of psychology. Like you're sort of dealing with this every single day, and it's like you're sort of like playing it, like you're trying to be self-aware, trying to figure out where you're at more than a business owner. And I guess like even poker players are at that extreme level where they have to sort of put themselves in a framework of abundance, even if they don't have a lot of chips on the table. So like they have to like shift their sort of mindsets depending on the situation. Whereas a trader, if you're abundant, you trade like an abundant trader. If you have less money, you have to sort of be more risky. Like it's insane. It's like a massive psychological sort of exercise every day.
Every single day, day in, day out, you got to be working at 110% as far as your brain. If you have a personal life issue, you're better off just shutting it off and not even trying. It's tiring. It's a lot. It's heavy. It's really, really heavy. It's the price you pay for, again, if you're trading, you're trying to hack life, like for a normal person to go from not very much money to many, many millions of dollars, you can't even do it in a career, like no career is going to give you that. You'd have to start a business. You'd have to, there's no salary in the world that's going to give you that level of, you'd have to start a business. You'd have to make money from that business or sell that business, for a multiple of your yearly revenue, in order to make big money, or trade, so you're taking a shortcut, and then none of these shortcuts are easy. There is a huge price to pay, huge psychological toll. A lot of successful traders have to change their minds so much that they turn into shitty people. And I don't even mean arrogant or anything like that. They're just like not fun to be around anymore. A lot of traders, because your life basically becomes a pursuit of money, as opposed to, like a bakery, like your life is a pursuit of making good bread. It's a more noble, it's more humble, as opposed to pursuing money all the time. You can turn into a shitty person because of that. Like what happens when you move to Dubai and now you're hanging with all the traders and, like you're getting invited to caviar and, dumb dinners every night, and there are, gold diggers around you, and it's just a different life, So all of these things can really sidetrack you and take you off the path that you want to be on as a trader. So there's a lot of costs you got to pay that go beyond just the mental one as well. But psychological warfare is definitely the main two words I would use to summarize what it means to be a trader.
Got it. Like in business, there are days where I wake up and I'm just not as motivated, or I'm more tired, or I had a late night last night, so that affects my performance the next day. But usually with business, a lot of my tasks are sort of manual, so I can just push through, do it slow and steady, and it'll be fine. But as a trader, that affects you, right?
Some people, yeah, it affects some people. It doesn't affect other people. I happen to be one of the people that it affects a lot. So, I will not trade if I've drank alcohol, for example, or the previous night. I will not trade if I got a minute less than 8 hours of sleep. I just have hard rules like that. And I learned these rules as a result of my trading journal and a bit of common sense as well. Other people can party, do all sorts of drugs and trade at the same time, and I don't know how they can do it. I admire them. I for sure can't. So it's different for different people. If you have a bad day, you just kind of woke up on the wrong side of the bed. I guess the best thing about being a trader is that it doesn't matter, because on any given day you probably have to do nothing, waiting for the big breakout. But it obviously helps to have, it helps in anything, whether it's business or trading, to have a good, healthy lifestyle with consistent, sleeping and no partying and stuff like that. Because then when the market is ready, what you don't want is like the market suddenly does something really exciting on Saturday morning, but you're going too hard on Friday night, and it's just not sensible to enter a trade. You can either break that rule and then maybe trade with compromised judgment, or you miss the trading opportunity. So that's something that you've got to consider as well. I think that's one of my favorite things about trading is you kind of have to have all your other shit together to be a good trader, unless again you're like that top tier of traders that I've seen. If you're not in that top tier, but you're happy to be in the second top tier, you have to have your shit together. You have to live a good life. You shouldn't have toxic people in your life. That's not going to help you, think with good judgment, stuff like that.
God, as you were saying that, I was like, wow, like what would happen if a business person applied that to their life where, hey, if they drunk the night before, they're not going to work the next morning. If they always wake up at 7 a.m. every single day and they got less than 8 hours sleep, they shouldn't work and they should take the days off and they'll let them recover so they can go harder on the days where their peak, and that might net more output and more work over a long run rather than just grinding out every day no matter what.
I think the great thing about being a business owner is that once you've got enough money to outsource work, you just the main work happens in your head. You're thinking like, which direction do I steer the ship, and everyone else is working on the actual wheel of the ship and the cloth that makes the wind move in the right way or whatever. I don't know what you call it. The sails. And so you can do that as a business person. I can't think of an example where having a healthy lifestyle where you have hard. The main thing about these rules, by the way, especially if they're like, I don't want to say like a workaholic, but someone that's like keenly interested in making sure that they have good output in whatever they put their mind to, is if like I have to take a day off because I was partying too hard, I'm gonna feel like shit about that. Like, why would I hurt myself in that way? Was it worth it? And hopefully the answer, if you're serious enough and care enough about what you do, comes to, it's not worth screwing up my progress, so I just won't partake. And then you get better friends too. I mean, not necessarily better, but in my opinion, better friends, and friends that are interested. Now the friends that you go drinking with are replaced with friends that you play tennis with, for example. So it kind of changes in that sense.
Sami, like, what is it like sort of being where you are at such a young age, like at 21? Like, do you hang out with people that are your age? Like, you missed up, you don't go to college, you don't, like, what is it like doing what you do at such a young age? Is it lonely?
Most of my friends are above like 25, I would say. A lot of my, for a long time, I didn't really have any good friends I genuinely like really loved for a long time, up until I started to kind of travel the world, specifically like age 17 and onwards when I got my license. And so all my friends were just kind of online. But after that, I have a lot more friends that are my age. I live in Dubai, obviously. So if you're in any big city, everywhere in the world has some young kid that's an e-com or something. So like, okay, I'm not an e-com guy, but it's a young guy. He's gonna be like between 18 to 22 a lot of the time, and he's just kind of like trying to get his hustle on a little bit. So it's easy to meet like-minded people that are young and like hustling a little bit these days, especially in a place like Dubai. So that that's quite easy now. Before, it was a big struggle. I was a very, very, very lonely person and was quite depressed about it too. Now it's turned into actually what the original goal was like, I wanted to be able to experience all the cool stuff in life that most people are not even open to the idea that they could experience it, simply because it's not on their career path. But I wanted to, for example, tour Europe in my Dubai Ferrari before I turned 21, and I was able to make that a possibility. So I missed out on college parties where I could have been pulling fives because I'm too drunk to see that they're fives or whatever. But instead, I toured Europe with my boys. We were in sports cars, supercars, and just fucking up wherever we went, and having a good time that way. So the rewards are different. I missed out on a lot of stuff for sure, and I experienced a lot of other stuff that people wouldn't have been able to, that I knew I wanted to before I became old. I actually feel like I'm in a position now where, like last year, I was 20, turning 21. I felt like I lived because summer was so crazy for me. It was the end of the bull market as well, so everyone was spending, and it was all fun. I felt like I lived like 3-4 summers. I lived the whole summer with my friends, with amazing people that I wanted to be around, and like that's the enjoyment that if I took a different path in life, I would have only been able to accumulate across multiple years, but I had it all within 3-4 months. And so what that's put me in is now a position where I'm 21, but I feel like I think very differently. I'm not thinking like I'm 21. I'm thinking like I'm much further down the line, which means more long-term moves, being more sensible. which is nice. It's always helped me to be smart with my moves from an early age. And then I just kind of have these off phases where I'm like, all right, let's have a bit of fun now, and otherwise I'm just kind of holed up in a cabin in the middle of nowhere and focused on what I need to focus on, gym, reading, that's it, stuff like that.
What's your thoughts on like traveling solo versus traveling with all the boys?
Yeah, solo traveling has a time and a place. I don't think it's anywhere near as fun as people make it out to be. Maybe I'm just boring to be around by myself, but I don't generally like solo traveling that much anymore. I've done enough of it. Traveling with the boys, it's I don't need to say it. I mean, it's obviously an amazing time. They need to be good people. That's important. You don't want to, travel with people that are annoying to be around or whatever the case may be. So that's hard for a lot of people. That was hard for me for a long time. The amount of times I planned trips, but these friends, they just like the suburban shitty town we grew up in. So they never wanted to leave. So you got to meet the right people. But yeah, it's the most fun you'll have traveling with a partner, traveling with, if you're a guy with your boys or a girl with your girls or whatever, traveling with your parents, man, fuck, like stuff like that. These are amazing things to do. Definitely my favorite thing to do in life, probably. Yeah, lots of fun.
Are there any sort of ways or any tips for sort of attracting sort of young entrepreneurs that have that abundance mindset? Because a lot of younger entrepreneurs, they're like competitive, they're like savages. They're gonna congratulate you on their IG, but they want to crush you. And then it sort of takes a while to then start finding and attracting just kind, down to earth people who just want you to succeed and they don't see your success as impeding on them.
I have to wonder how much of this would be a reflection of the individual. When I really struggled to find friends that I would consider good, I took a step back and I realized, oh, I'm not good either. And I'm not good in different ways, maybe, but I'm not good either. So, when I worked on fixing that, it became really easy to find good people. I think that's an essential part of it, because while it might not be the whole, like a lot of people are just shitty for sure, but you're not in control of other people. So you are in control of yourself. So that's an essential thing I'd mention. Other than that, I mean, Twitter, Instagram, find them that way, talk to them. There are a lot of fake people, man. It's kind of hard to get away from, right? Like, especially again, if you're in a place like Dubai, for example, or other major cities. Major cities kind of breed that mentality. Whether we're talking about young kids online making money, or a 40-year-old guy that's climbing the corporate ladder, like it's just the culture that is bred in that environment is toxic. So yeah, you just gotta find down to earth people, be one of them. I don't really know. Life just happens. And you come across them.
What were the things that you sort of worked on that sort of then created this reflection where you started just attracting great people?
The primary thing for me was it was making myself a better person, which is very vague on purpose. It's everything. When you work on yourself, whether it means making money or fitness or educating yourself or spiritual, whatever, if you kind of stay true to it, you're disciplined, you don't stop after 3-4 days, you just kind of build like this self-confidence, this energy around you, which like people won't want to disrespect you. They won't want to be cunts, basically. I don't know how else to say it. They won't want to be bad people to you. I think that was kind of what did it for me. Obviously status helps, but then you attract, potentially a more fake audience too. But status is like the biggest thing that can help with this, because if you're high status, no one's going to want to, but then they're only nice to you because of that, right? So I'd say the number one thing is yeah, you commit to doing good things for your life, and you'll build the energy about yourself that will prevent people from being hostile or not nice towards you. I think that might, that it's probably not amazing advice. I don't know. I'm probably too young for that question, man.
No, I really like that answer. It makes total sense. Like that's all you can work on. And I think if you sort of, I feel like you can even just, if you have like 10 points that you could work on, even if you went hard on one point and you just got really good at that one thing, you just sort of automatically just attract better people. Yeah. Like you can like,
I think so.
yeah.
That's what happened to me. Oh yeah, and cut off the bad people too. There's no reason to keep them around. If you wouldn't want them, around when you're 60, just whatever. I mean, a lot of people, they just have very mediocre, shitty friends because that's just who they grew up around. And if you want better friends, you got to make the space for them, right? That's a pretty scary, difficult thing to do. It was for me, but it's worth it. Definitely worth it. It's quite shocking actually. It's almost every time I took someone out of my life, someone better came in. Every single time. It's so strange how it happens. But a lot of people can relate to that, like that's actually quite a universal, thing that people realize as they get older. It's just, try and realize it when you're younger so you don't waste time.
That's so good. Tell me about that Europe tour. Like I see you got the Ferrari. How old were you when you got that? What was the experience of freaking getting a Ferrari at like such a young age? Did you get it in Dubai?
I got it in Dubai, yeah, when I was 19. That was cool. Yeah, yeah, I really, really liked that car. I was a, I have a problem with cars, man. Like I just kind of like fall in love with a car and then that's it. Like I genuinely cannot fucking control myself and I just go out and buy it. I just can't. Like I used to be, well, still am, I guess, friends with Andrew. At the moment he's still in jail because of the corrupt Romanian judicial system. But I would go to him for advice. I'd be like, hey, like I want to buy a car. I'm worth this much. What do you think? And he'd always just be like, do it. And you just like snap, like just fucking buy it. And I'm like, okay. Andrew said yes. And that kind of contributed to it a little bit. So the Ferrari was one of them, and I just I moved to Dubai and I bought it, and that's a lot of fun. Took it to Europe, flew it over, flew it into London, took it to the house that I grew up in when my mom was still on welfare. So that was pretty interesting to drive by the same street that I would walk in and out of to school and stuff like that. And then just took the Euro tunnel, which is a little underground tunnel that bridges England and France. And then we hit the road. There was 4 of us in 3 cars, and we just toured Amsterdam, Germany, Switzerland, Saint-Tropez, Monaco, into Italy, ended in Croatia. What did we do? We went to some clubs. We went to amazing driving spots. We met very, very good people along the way. A few friends flew in along the way to meet us because we were on the road for a long time. We went to cigars. I don't know. We were just hanging out. We were we were just being 4 young guys that have a bit of cash and just enjoying ourselves. Young guys that like none of us were. Only one of us came from a good family, but even he didn't have help from that family. Like he did everything on his own. He's actually a fucking legend. His name is Suhit Amin, and this guy, he's actually the guy that got me into my first business. That YouTube thing I mentioned earlier, he got me into that. And a year or 2 later, he got cancer, and he survived it because he's a legend. And now he's kicking about and just like living his life, doing amazing things. So we all were self-made. Yeah, we had that camaraderie about us. We had to find each other online. We didn't grow up in the same area. Suit was from Scotland. The other guy, one of the other guys was from the very bottom of, the UK. So we were literally on opposite sides of the same country. Granted, it was the same country. And we kind of pulled our way in our own ways. And then we took our cars on a fun tour, and then I ended, a month of extreme socialization and lots of stuff going on. I kind of decided I want a break, and I just kind of stopped in Italy in the mountains in the Alps for about 2 weeks. And I was just completely by myself. I didn't speak to any other humans other than like hotel staff. And I just, I was just on my grind, just enjoying, a bit of solitude for a bit. So that was really fun. And then 21st birthday, that was the whole point, is I wanted to do that. Like I've had very limited enjoyment in my life other than video games up until I, moved to Dubai basically, or I could say up until I got my license, so I wanted to do something really big. I felt like, okay, just before I turned 21, I felt like, I'm really, I was looking at, okay, 21, like, you're an adult at 18, you're an adult at 19, at 20, but 21, like everywhere, like Canada is like, you can buy like whatever weed at like 19, and America's like alcohol at 21, UK is like everything at 18. So different countries, different cultures have different ideas of when you're an adult, but no one disagrees. When you're 21, that's it. You know, like you're a man. And I was just thinking, like, you know, the Europe trip was planned for multiple years, so I'm definitely going to do that. But other than that, I'm kind of done with enjoyment. You know, so it was really nice to go through that, you know, euphoric explosion of excitement, you know, during that 1 month road trip. But then, you know, compose myself and just think and be on my own for 2 weeks before having one final crazy blast off in Mykonos for the actual birthday. So that was fun. Other birthdays, other important events, I do literally nothing. You know, so I kind of just, like I said, it's either everything or nothing at all. I have a very obsessive personality. When I'm doing something, I only want to do that, and that has served me well, I think, as well.
It's so cool. When you sort of are on the grind, is that sort of you reading, healthy diet, working out? Because you can't, as a trader, you can't trade more, right?
No, exactly. It's I'd be back in the trading books. You know, I study the same material I've studied a million times, just because it works. The more I study it, the better I do somehow. I don't know how it works, but it's just how it happens. So I study trading materials that I've consumed before. I study others that I haven't. I just pay more attention. You know, it's hard to pay attention when you've got things going on. You know, like you've just gone to the pool and now you have a, you know, lunch, and then, you know, you're gonna fuck about with your friends for a few hours before dinner, kind of thing. So you know, you can't be on it and paying attention when you've got that kind of lifestyle. I mean, you can. Some people pull it off, but like I said, I don't. So yeah, it means other things. It means working more on the businesses. It means working, you know, just not having excuses. You know, like if I'm going for dinner at like an Italian place and there's like an amazing, you know, linguine, you know, or some grilled chicken breast, like, you know, what am I gonna, you know? So just like not going out helps a lot as well to, you know, not make mistakes. It's why the fastest growth I ever had, by many measures, including like, you know, percentage growth of funds and stuff like that, was always when I had nothing in my life and I had no friends, no social life, I never went outside. The only thing I could do was be focused. So you know, or play video games, but video games weren't interesting anymore because at this point I was making money. So, you know, a lot of people, when they start making money, they lose interest in video games. In fact, a lot of gamers are now like ecom gurus and stuff like that too. You know, so you go from one thing to another, and yeah, when I'm just kind of locked away and I don't have any choice but to be good, to do the things I should be doing, that helps. That helps a lot.
Sami, are you and all the boys, do you guys all live in Dubai, all in the same sort of building? Is that the setup?
No, so I have a lot of like close friends that I don't know if I have a lot. I have a good amount of close friends that I consider like that. A lot of them do happen to be in Dubai because I'm there most of the time. None of them are in the same building. Dubai is a small place. You don't need to live near somebody, you know, kilometers wise, in order to, you know, hang out with them. Even the most far areas are not that far, you know, generally, unless you're like ridiculously far for like no reason. But like most people live within 20 minutes of everything, you know. So I live in downtown, but if someone lives on the opposite side of the city in Marina, I am only 15-20 minutes away from them, you know. So that's pretty easy. Yeah, and then yeah, a lot of friends like, you know, dotted around like LA, London, whatever. So you know, just kind of meeting them when I'm in that respective city too.
Sami, tell me about how you met Andrew Tate. That's so crazy. You met him like pretty early on, right? Tell me about how that came together.
Yeah, I think it was like 2018.
Oh, that's really early on.
Yeah, like 6 years ago. Yeah, he was on Twitter, and what was his name on Twitter?
Was
Tate
it Cobra?
Speech.
Okay, Tate Speech.
Tate Speech, I think. I think Cobra Tate was already banned at that time from Big Brother. I just DM'd him, man. I was like, hey, I'm a young guy. I'm making money. What's up? You know, and he likes that. Always has liked that. I mean, you'll notice if you pay attention to the way he behaves around young men. You know, anywhere between kind of 16, 30, maybe even, or like 24. You know, that young age bracket, he will give them a lot of attention and support and whatever. I mean, he's just that guy. So, and he was that guy for me at a time where he wasn't very famous. So it was actually quite easy to you know, have a conversation with him, have phone calls with him. And I remember like I'd be beefing with my girl and I'd call him up. You know, it's my favorite thing to tell about him. You know, he'd just be like, drop the bitch. I wish I took his advice earlier. You know, but stuff like that. So he was always there as an amazing friend. It's also like, you know, someone else could have given me similar advice to what he gave me, but you know, like when it comes from a man like Andrew, you're just gonna shut up and listen, you know, like as opposed to someone else. So he, you know, sometimes he might not have, you know, fitness stuff, you know, he would say, shut the fuck up and get in the gym kind of thing, like to that extent, not with these words, but you know, like with that kind of tonality. And when Andrew says it, you're like, okay, you know, but like when someone else, when your friend says it, you know, and he's also kind of out of shape, it's like, shut up, bro, you know, whatever. Yeah, so it's a bit different. Yeah, and then we met up a couple times early on. Then when he moved to Dubai, he came to my villa. That was fun. Had a little party. I was actually with him just like a month before he got arrested at his villa in Dubai when he was recording a podcast with Zubi. Tagged along with Zubi, and we were just yeah, man, that was weird. I remember sitting right there, and he was talking about, I understand in this game you've got 3 strikes or whatever, cancel, prison, kill, and yeah, it was surreal watching him say that in person. You know, I was sat like where your couch is behind you, like that far away. As he said, one of the most famous things he's ever said. That literally, it was almost like a prophecy. So yeah, interesting guy. So is his brother. Love his brother. They're both amazing people. They're obviously, you know, being treated very unfairly. Very, very generous, kind people, and extremely, you know, like well screwed on with their like head mindset and stuff like that. It's contagious. Yeah, cool guys. Cool, and they love cars. So you know, that's always fun.
So
I remember once when I moved to Dubai, Andrew started messaging me and he was like, "You need to buy a 720S." I was like, "Chill." He's like, "No, you need to buy a 720S." I was like, "But I don't have the money for it right now."
Yeah.
And it was funny. It was funny. I miss him. Yeah, it's a shame. It's a real shame what's happened with the yeah, but he'll come out. I'm surprised they've kept him for this long, man. We're on like 4 months now. I did not think it would go on for this long.
I miss him. Dude, like, I don't know what's happening to my IG feed, but I'm just seeing a lot of Andrew Tate recently. It's like, I'm checking his IG to get his, like, thoughts, because that's sort of like his up-to-date thoughts, but I miss his sort of live views on the world.
Yeah, it was fun. You know, I didn't actually pay attention to most of his material when he really started to blow up, because it was kind of just the same, you know, stuff in slightly different flavors, and you like when you've heard it the first 50 times, it's not so interesting on the 5,000th time. You know, so I couldn't really comment on that stuff, but it's good that he's got a good team around him, though. That's really good. He's got good people that are working on his case and stuff like that.
Does Andrew just have like such a huge bandwidth where he just has like a lot of people that he talks to, helps, and has a lot of relationships? Or is...
when you help a lot of people, they will want to help you back. But he also has the war room, you know, and the war room is a very connected, very well connected group of people. So there's that. Yeah, I think it's a combination of these things, but I think like the biggest thing I've noticed was like people that are very close to him, they are diehard protectors of his soul. And it's almost a bit weird sometimes, I'm being completely honest with you. Like it is almost like sometimes I looked at it, I was like, this is, I mean, you're a grown man too, you know, but then you step back and realize, why is this guy like this? It's because Andrew, either directly or indirectly, has changed this man's life, and they feel like they owe a lot to him for that. And I certainly feel that way too. You know, like just not even like from the personal conversations I've had with him, but like just fucking like listening to him online alone, you know, was life changing too.
When I was like 19, I sort of moved to San Francisco and I was working in a small startup, and I think it was like a team of 5, 6, and it was insane. It like the other team members were like protectors for the main guy, my mentor. And like, you know, they would take a bullet for him. Like it was like a family setting, and it almost felt like a bit of a cult. Like once I was in, I was just infatuated with this whole setup, and I was like the little younger brother, and you know, we ate together, we went out together. My mentor, he'd have different perspectives on the world, and we share it, and it felt like we were in this black box, and just, it was insane.
Yeah, it's interesting to like get plugged into that, you know, especially if you've never really experienced it before. To see people behave that way for another person, that's not God. you know, the only other way people, you know, glorify others would be like a celebrity or a politician, you know, usually, you know. So obviously this falls into the celebrity category. Yeah, it's interesting. It's also interesting that his message a lot of the time is like, think for yourself, be your own person, you know, and
Hmm.
you know, so that's something which I always found quite interesting as well. But man, I mean, it'd be great to be in his position, you know, like access to 4,000 very well connected people all around the world. If you could monetize that, what would I like? That would be worth, you know, tens of millions of dollars at least. You know, if you could, you know what I mean? So that's really cool.
Because I was like thinking about it, like when I was like in that startup setting, like prior to that, I was this young ecom kid that, you know, made six figures, and I was 19, I flew over. I wasn't expecting to like work with, I was supposed to just sort of help them out, but you know, 10 days turned into 30 days, turned into like 9 months. And there were times where I was like, fuck, like my mentor is like super duper smart and switched on. Like maybe I don't have what it takes. Like maybe I should serve a bigger goal, and maybe I should let my visions go, and I'm on a winning ship right now. And he would always talk about how, you know, it's better to be D-Rock who works with Gary Vee than be like your own photographer. And I'll be like, yeah, maybe I should like just give up everything and just like enjoy this thing. And it was so infatuating. Yeah, it was like, it was crazy.
I think that there's a lot of benefit to be found from, you know, instead of working on your own, working for someone else that's just way better than you. And then, you know, if you still want to work on your own after a year or two of good experience, then you're just way better equipped to do it. You know, so that's always been really cool. You know, being in the presence of greats and stuff like that. I think that's actually essential, to be honest, if you want to, you know, level yourself up, which again means like dropping off dead weight and finding, you know, better people, whether that's online or in person.
One thing I've always like, after coming out of that setting, I've always wanted to have something like that of my own, like have a circle of people that have my back, are like family. And I think that's sort of the next chapter for me, where I met a lot of very successful people, but a lot of the people I met, they're either lone wolves or they're alphas, and they have their own group of friends. And I was like, damn, like I'm sort of at this stage where I want to start building my own team, my own crew. And I think I'm still trying to figure it out, but yeah, I feel like that might be the next step for me, I guess, specifically.
It's really cool. You know, not only do you have you know, good friends, but you know, like people that you could travel with and have fun experiences, but you have people that can help you, people that can, you know, if you don't have a particular connection, get that connection for you, and so on. So there's a lot of utility in it. I've actually noticed that a lot of young guys that have made a good amount of money, 6 or 7 figures minimum, have now gone in that route of you know, either starting their own thing or joining another one. You know, and I'm in a few, you know, and they're good. You know, I'm not really active in any particular group because I don't belong in a group, but at least not now, you know. But I've noticed that the people who are in them, they get a lot of benefit out of them. That's definitely a cool way to do things. We're all very niche these days, right? Like everyone kind of finds their community. You follow who you like, you know, you subscribe to the subreddits that you know, that you agree with, and then you kind of just like only like have agreement around you. You kind of only just have people that are in your same line of thought. You know, so I think people are trying to make that into a WhatsApp group chat now, into a Telegram chat, you know, like into a community that you can interact with. And it always seems to float around like one alpha male persona, which I've noticed. Like Andrew, you know, did that with the War Room, but that wasn't the first time it happened. There have been many instances of it before, and many more afterwards as well. In fact, it's funny, people who got kicked out of the War Room would start their own versions of War Rooms and stuff. It seems like a really universal young man's hustle right now, and it definitely works. It's definitely a good thing to be a part of if you don't have that network already. Me personally, it's not really something that applies. Not applies, but not something that interests me, because I've found that, like, for my position in my life right now, I kind of like, I know everything I need to know. I know everyone I need to know. I know everything I need to do. I just need to do it. And you know, a group chat isn't gonna help with that.
Do you see yourself sort of going through this journey of life sort of mainly solo, doing your own thing with trading, because you sort of can do that independently, maybe find a partner, a girlfriend that is perfect for you, and it's just like that? Or do you sort of yearn to have best friends that really have your back, or are you pretty happy with having a bunch of friends around the world that you can kick it with whenever you want to travel?
I think all of the above, man. I think most people would want everything you just said. I think most people would be quite happy with a very close group of friends and a partner, and then a wider group of friends that they have in their city, and then if they can and want to travel, then also friends around the world. And I feel like that's more or less what I've kind of been working towards or having already. So I'm quite happy with that. I might look at more interaction and more stuff with other people later. I go out like nearly every night anyway, when I'm in Dubai, or at least I used to. Not so much in the last few months, and it's just because I've got certain goals that I need to work on. I kind of just accepted, like, yeah, a lot of people are not going to see me for a while, and that's okay. Um, I'll come back a new person.
What's your thoughts on on that journey of trying to build that inner circle, finding that Tristan, finding that Luke, people who have your back, they don't have that ambition, they don't really want to go off on their own, they want to help you support, they want to support your vision. So you're looking for people, it's like this mix of, you want deadly killers on your team, they're not to a point where they're off doing their own thing, they want to help you on your vision. It's that's the part I'm sort of trying to figure out at the moment.
So each of these people you've listed do have their own thing, and I think that is an important part of it. It's hard to be a character like Tristan or other names that you may or may not have mentioned if you don't already have your own thing that you're running. Because how would you get there? So I want my friends to like have whatever like that, like whether it means like a business or like a very serious boxing profession. I don't know. It doesn't matter. But then at the same time, you can just kind of hang out, right? And are you describing like how do you become like the main guy of that group?
Or even, yeah, I think that's what you just helped me realize, that everyone else is doing their own thing, and now I'm looking at it, that's true. And maybe the reason why Andrew's the main guy, he's also doing his own thing, but he's just at a much higher level, and he tracks all those. Is that
Status. That's what you've just described as status. And then ideally, you would genuinely help the other people around you, as he would have helped his brother, as his brother would have helped him, as he would have helped his friends with whether it's good life advice or whatever. And then you have even more loyalty. They want to help you back. It turns into a really beautiful thing. So I think, yeah, achieving those dynamics, most of it would be done through status. In my opinion, you don't want to chase that. You want to chase the process instead. Like, okay, like a lot of people want that, and I understand why. It's quite nice, to be the center of a big group like that. Obviously, you're not going to get there by being average or even above average. You're going to get there by being, exceptionally exceptional. Like very, very exceptional as a character is how you're gonna. When you're that guy, you just kind of get everything you want anyway, right? Like, all the business opportunities come your way, all the girls, all the friends, all the, cool opportunities to like shoot exotic weapons in Thailand or whatever, like everything's going to come your way when you're that guy. So, just focus on being that guy. It's almost the same universal approach of like, just be a cool person, achieve a lot of cool shit, you know, educate yourself, live a lot of life. I don't know. That's what it comes down to for me.
And then I think the thing I find impressive is that all these people that hang out with Andrew, they themselves have high status and they could have their own circle, but they choose to hang out with Andrew.
Yeah.
So like Andrew just has to be like much, like really, really cool to be able to like what's another metaphor? It's like, the lion, and then there's, I don't have
A
good
lot of other
metaphor right
lines.
now.
Yeah.
Yeah.
Yeah. You've got like one king. Like, I mean, so again, a number of these people have their own communities too. The others, a big part of it is like stuff like, I'm not in the war, so I can't comment on this, but my understanding, it's not like if you're in the group and you're not Andrew, you still have access to everyone else that's in the group, right? So I think a lot of these people, like, why would they? Like they've got their work, they've got their career. Why would they then start up, a bunch of other online, paid things, including perhaps a group chat, something like that. So if it's a good group that retains membership that people want to be a part of, it doesn't, it doesn't matter if you're not the main guy. I'm not familiar with the politics, if there are any of that group, but I know it's very big, in terms of size and connections. I think everybody helps everybody is definitely a part of that.
What was your relationship like over the 5 years you knew Andrew? Was it just like you would always message him here and here, give him a call if you're ever in town, roll up with your car and then sort of drive around together?
That's it. Yeah, yeah. We never actually drove around together. I think. No, we did. Yeah, we did. We did. We went to Jebel Jais, the tallest mountain in the UAE. That was fun. That's actually one of my pictures on Instagram, I think.
Yeah, you got the iconic photo.
Yeah. So that was a drive I did with him. Yeah. I mean, a lot of the time, yeah, it was just what you said. I mean, it was actually exactly what you said. Everything that you said. We just kind of like, text every now and then. I was also like, I would give him my read on the markets, which I'm very proud to say that I think he found at least somewhat useful, and then I'd also go to him for advice. And, maybe I needed help with something, he needed help with something, stuff like that.
What do you think, you sort of being on the inside, what do you think people on the outside don't see from Andrew that you probably were able to observe since you were in that situation?
I don't know, man. People like you and I, we get a lot of Andrew in our algorithm. So, if you see a lot of Andrew in your algorithm, you're only seeing good things. I struggle to find people that don't like him. Like it's like the internet makes it sound like he got cancelled by like more than 50% of the population. But okay, granted, I live in a conservative country, Dubai, UAE, but I really haven't met very many people at all, whether in the UAE or in the West, that don't like Andrew. A lot of the people that don't like him just haven't listened to him with long form content. A lot of the people that don't like him, they just would have seen clips out of context and stuff. So everyone gets targeted that way, and he obviously got targeted a lot because he also gave them a lot of ammunition too. Like he also said a lot of stuff that he shouldn't have said. I think that they just have those opinions of him that haven't had a chance to fully develop or anything like that.
What were the biggest lessons you learned from Andrew? Was it just a lot of like, hey, go to the gym, hey, you know what to do, just freaking do it?
It was to buy every car that I want to buy without questioning it. And there was this one specific moment where I did not follow that advice, and I didn't buy a Ferrari that I wanted. It was $1 million. I should have asked Andrew, actually. I'm wondering if I did ask him. I didn't end up buying it. Bitcoin was at 50K, and it turned out to be a very big mistake because Bitcoin then crashed down to like 17K. Yeah, that was the one time I didn't buy a car that I fell in love with. But yeah, that's the primary thing I got from Andrew. If I can put it down to anything, and I'm sure he'd be proud of me saying that anyway, is that I should just buy every car I want without question. In a more real sense, it was I think the key thing that I took away from him was in his I and Mine course, he talks about, you've got this like shadow version of yourself that is your enemy. You're going to meet him on your deathbed. Every day he did the right things. Even if you did like 80% of the right thing or 0%, this shadow version did 100% of the right thing every single day. What's the difference between you and him? Compete against him, and that really stuck with me.
I think that theory of just buying things, like I remember Andrew talking about how, money isn't real, you should spend it, it's inflation. And like even my mentor, he would push me to just buy things that I would need. He would like, dude, just get the newest iPhone, that 10%, 1% improvement, would get the newest laptop, buy that car you want. And I remember buying my first car, it was like a CLA 200 Mercedes. It was like maybe 25, 30 grand. And I only had 60 grand. It was like half of my net worth. He was like, do it. And it's weird when you do these things and it forces you to make the money back faster. And it's somehow like buying and sort of putting yourself with these, surrounding yourself with these nice things and sort of spending your money and not saving it up seems to ironically do the opposite and help you earn a lot of money quicker somehow.
Yeah, so there's the abundance mentality part of it. And there's also like, if you're priced out and you can't afford the stuff anyway, then why the fuck are you looking at it? Like, why is your head not like, at your workplace or working on your business or whatever the case may be? Like if you can't afford the car in the first, like if it's like, for me at that particular time, it might have been that like, the Porsche that I wanted that he told me to buy the first time he really pushed me to buy a car. I probably would have made as much as that Porsche within that month. So like by very rich people standards, it's not a smart idea to spend your entire monthly earning on a car. But by the standards of a guy who also came from the streets, Andrew, You know, like he knows like you can just kind of make money and then make more, you know, and I think that's been a big part of it, is that abundance mentality. You know, you don't need a shortage of anything that you like in life. You can have it all. So that was quite useful. And I was already kind of headed in that direction, but to a lesser extent, you know. So to have that amplified and nurtured, you know, with good advice was quite useful. Andy, I have to get going though, and I want to do a follow up with you because there's a lot more that, you know, it sounded like we could go through.
I wrote down like so many things, but I really appreciate your time today, Sami. Sami, where can people find more about what you're doing? Where are the best places for people to reach out? Because you've shared so much valuable content today. Where can people find more?
Yeah, so trading related content, YouTube. Just type in my name, Sami Loyal. Four flies, either work. Instagram, Sami Loyal _. That's probably the best way to look at what I'm doing. And Twitter, I'm more markets focused on Twitter. I talk about the markets a little bit. I'm not very active on Twitter, but those are the three places. Instagram's best for me, and YouTube is best for my knowledge. So that's what I'd say.
Sami, thank you so much for your time today. I just love how self-aware you are, how humble, down to earth. I love how you just share the downs, the losses. It makes it really realistic. And you're sort of just this down to earth dude, like especially at your age as well. Like a lot of people at your age would be pretty sort of, you know, they'd be really confident and really sort of cocky, and they deserve to be. Despite you can do that, you sort of are this down to earth, chill dude. And I could just feel that with the last few hours we've communicated. So thank you.
Yeah, thank you as well, man. I actually noticed similar things about you, but I didn't even get to talk to you much about yourself. I'd love to do that. I set out on this like objective to show everyone that like you can have it all and be a nice guy, you know, because there's not very many that are both. But it's nicer to be both, because then people meet you and they're like, who the fuck is that? Like, how is that person like this? You know, and it's nice to be the nice guy, you know, because I think that's the right way to be all the time. You know, you don't need to make $100,000 and then act like you own the world and be an absolute cunt. You can still be a nice person too. And, you know, big props to those who pull it off.
You're right, and I think I was just surprised, like watching long form content of Andrew, seeing the behind. He's just a nice, kind, humble dude. Even Drake jokes about how girls, when they meet him, they tell him, wow, I'm surprised you're so nice. It's like these people at the top are usually generally nice people. Yeah. It's a bit rarer to see those type of people at younger age though. I think that's sort of what makes you rare, Sami, is like when people at a younger age and they have that, that's like a pretty rare thing that you have.
Thank you, man. Thank you. Appreciate that. Yeah. That's something I'm proud to be able to do.
Thank you so much, Sami. I really appreciate it. I'm going to let you go. I know we went super over time. If you guys made it this far, thank you so much for your time. I really appreciate it. Please drop a review on Spotify and Apple. I've been reading all the reviews. I'd love to get your feedback. And again, thank you so much for your time if you've made it this far. Hopefully it was worth your time. I'll see you guys next week with another episode. Peace.